Good morning, everybody. Welcome back to another episode of the Market Open. It is Friday, March 21st. Let me make sure the mic is working so we don't have a repeat of yesterday. Yes, it's good. Okay. Yesterday on the market close, there was a good minute of mime action because there was no audio, so we're good to go. We can hear what I have to say, and hopefully what I have to say will be valuable today. It definitely is going to be analyzing a lot of different headlines that we've got going on. Last night, we had a Tesla meeting, emergency, all hands. It came out of nowhere, quite frankly. Did not expect that to happen. That was about 9:30 to basically 11 p.m. Eastern last night, so we're going to be talking about that, going deep into some of the headlines we got and see what it means. We also have quad witching day. And the extent of this is pretty massive. Just to show a quick graphic right here, I didn't even know it was going to be this aggressive. 4.7 trillion with a T of options are expiring today, March 21st. I'm sure some of you either have calls or puts, or you sold calls or sold puts that are expiring today as well. But this is one of those days where the entire market kind of settles in and we have a lot of options that expire. So I think some wonky behavior can definitely be happening later throughout the day in terms of algorithms, market makers, manipulation, where the market wants to go, where the market doesn't want certain stocks to go. And so that might have a certain type of impact on the trajectory of how stocks end. This is also the third week of trading for March. Seasonally, we should have bottomed by now. We looked at a lot of charts for that. So maybe we go higher, but this might be one of those days where it gets a little bit aggressive. And then on top of that, we just have some general headlines on the macro. No real macro data in terms of CPI, PPI, or jobs data. Most of that we got throughout the week. We do have some headlines on credit. We have some headlines on Bank of America Global Research cash outflows into equities in Europe. So we'll talk about that. We also have India, that this broke just an hour ago. India is now in talks with the United States for a mutually beneficial trade deal. I think we're going to get a lot more of these headlines going into April 2nd. Because a lot of these companies, I think, or countries are negotiating with each other right now. India is one of the countries that tariffs the crap out of the United States on certain products like alcohol, for example. So it will be interesting to see if we can resolve some of that stuff. And then we'll talk about Nike earnings. I day traded Nike randomly, like literally, I think 2 minutes before they had earnings yesterday. Sold at 74.75. Right now it's down 10% at 68. So we got out at a good price. But yes, this is the problem with randomly betting on stocks. If you get a little bit too aggressive, you could end up bag holding them. So we'll talk about Nike. I mean, it was a really good beat on the top and the bottom. I guess the guidance was so sandbagged, though, that beat was not good enough. And after the call, we ended up seeing a lot more pain on Nike. So that's pretty much it for today. We'll get through all those headlines, and then we are done officially with the third week of trading for May. So there we go. Or not May, March. We're not in May yet. Good morning. Good morning. Thank you, everybody, for being here. We also have Goolsbie on CNBC. We'll get into him for a second after we listen to Tesla. I don't think he's saying anything too crazy. Pretty much just saying that inflation is under control. So nothing too different from J-Powell either as well. Because today is Friday, let's put in the chat where we are watching from. We'll start with that for the day as we end out this week. Where are you watching from? And then we will get into Tesla. Oh, yeah. Then we have Options 201 on Saturday. That'll be fun. So 10 a.m. to 12 p.m. Pacific, 1 to 3 Eastern. Jason and I. Options 201. Oh, and then Micron had earnings today. Is Micron up right now? Micron, they were up yesterday. MU is down 4%. Of course. Well, the entire market is down right now in the pre-market anyway. So, yeah, of course. They had a good earnings, though. They beat guidance pretty substantially, growing over 40% right now. But Micron usually never holds their gains. Okay, let's see where we got people from across the world. We got KY from Hong Kong, Siren Industries from Netherlands. We got Martin from Uruguay. Martin, it feels like you're saying I'm gay. You are gay, but I assume that's Uruguay instead. But that's awesome. Binod from Cleveland, Marvin from the Netherlands. We got Minneapolis in the house, South Carolina. We got Craig from Manchester, Ethan from Maryland, Antonio from Munich. Hopefully, I will be in Munich later this summer. So hopefully we get into Germany. Omer from Berlin, Martin from New York, Kraft Jan from Bavaria. We got Scooby Snacks from the UK. I love it. We've got Mom's Basement in Canada. Trust me, I relate to that one. Jasmine from Jersey. Good old Jersey. Dude, we have to do a Jersey meetup. A lot of you guys are in Jersey. We got to do a full-on Jersey meetup because that would be like a meetup that's literally at home for me. So we gotta try to do that one day. We got Zambia in the house. We got London. We got Sweden. We got Fort Lauderdale. We got Nashville. We got Vancouver. Marco from Italy. Jimmy from Motor City, Detroit. I always associated Detroit with Eminem as well. He's from Detroit, right? He's Michigan, Detroit. So that's how I think of Detroit, and obviously cars and manufacturing there. We got Chicago, Sacramento, Elaine. What's up, Elaine? Thank you for being here from California. Greg from Ohio, Rick from Florida, Mike from Delaware, Kentucky, Toronto, Long Beach, Mark from the 51st state. I love it. Belgium, London. Dude, we got a very, very, very international audience. We got to visit all these places one day. It looks like April's going to be the Toronto meetup. I think that's what we're going to do. I think April, we're going to do Toronto. I'm trying to figure it out, get everything planned, but I think April we will be in Canada and see what we can do. So hopefully that should be fun. All right, cool. Awesome. Thank you, everybody, for being here. We hopefully survived another week of trading. Well, we still got 8 hours left of this trading, so let's see what happens today. In general, I think if we end out a little bit red or flat, it was a successful week, especially after the FOMC meeting, especially after CPI and PPI last week, especially after not going further down from that 549 level that we hit 2 weeks ago, which was an official 10% peak to trough decline. If we hold these levels at this 560, Tom Lee thinking we kind of bottomed around 555, then maybe we can start making the progress after April 2nd and keep going from there. All right, cool. No TJ today. TJ should be back next week. So TJ's traveling this week. He will be on next Friday, and he'll explain the whole Robinhood to Tasty Trade stuff. We'll give him the floor to explain everything that happened and then show you guys Tasty Trade. Again, it's not the most intuitive platform, but it's not a horrible platform for selling options. So most likely next Friday, TJ will be back on. Sorry, I pressed the wrong button. Sorry. such a professional streamer, dude. I'm just 2 years after doing this, I know exactly what I'm doing here. But I was saying TJ will be back next Friday, and then he'll explain everything in regards to selling options. Okay, cool. So let's get into it. Last night, the most random thing happened. I didn't expect it. I was actually doing a Twitter Spaces with Steve last night. Some of you guys that were on Twitter probably heard that. It was kind of random. I just said, hey, Steve, let's go live on Spaces. And so we went live for like 2 hours. And as soon as we were done with the live stream, Elon Musk had officially held a Tesla company all hands meeting. Now, this all hands meeting was basically kind of like a event for the public to be able to gain access to. They do this every quarter, but they've never done this publicly. I think after the Dan Ives note that came out yesterday, basically saying, hey, Elon needs to step up. We need an adult in the room. Like, he needs to at least kind of show that he cares about Tesla. I don't think Dan Ives literally influenced this for happening, but I think Elon has started to feel a little bit of the pressure from the shareholder base around, hey, like, you can't just like treat us like shit. Like, at the end of the day, we still need we need updates from the company. We need to know what the hell is happening with the company. And so he gave a bunch of updates, and he spent about 3 hours or 2.5 hours talking about all the things that Tesla's doing. It was one of those all hands that makes you feel confident again in Tesla and feel like they're trying and feel like they're not, just not doing anything, or that Elon's only in DC. And so let's play a couple clips from that. He said a variety of different things. First of all, here's what he said about Optimus. He had some bold statements on that. Then we'll talk about autonomy, and then we'll keep going from there. But here's some clips from Elon speaking at the all hands. Here's my question for everyone in the chat, because I'm kind of on both sides of this. Was this meeting because of desperation? Because my gut feeling is like, all right, they were getting kind of desperate that the entire public is starting to turn against them, and they need to like reinform their investors that like, hey, we're still a great company. They probably wanted to do this anyway, but it also felt like they had to do this to an extent because, again, sentiment is getting pretty bad.
The only company with all the ingredients for making intelligent humanoid robots at scale is Tesla. This is a super big deal. Like, my prediction is that on this front is that Optimus will be the biggest product of all time by far. Nothing will even be close. I think it'll be 10 times bigger than the next biggest product ever made. Like that level. So
okay, so like, again, even in those 30 seconds, you can tell, hey, wait a second, this feels a little, this feels a little pumpy. in terms of what he's talking about when it comes to Tesla. And it did feel like the meeting was based a little bit on desperation. Bsoft says 110% yes, but as a Tesla shareholder, we're so desperate for any bit of Elon showing he still cares about Tesla. That's fine. This was the bare minimum, enough we will take for now. I would agree. I mean, at the end of the day, it did feel that it was desperate, but it also felt like Tesla shareholders needed this, especially not even because of the stock, just because of the general sentiment about Elon not being involved with everything that's going on. I think that was the reason why he needed to come out and just say, hey, I'm here, I'm alive, I care about Tesla, and I believe that Tesla is going to do very well. Now, some of these grandiose statements, I think also people did not enjoy, because at the end of the day, he's been saying this over and over again. So what he just said about Optimus was like cool, that it's going to be the biggest product ever. It's going to be bigger than the iPhone. It'll be worth 20 trillion. But the specifics of that, not really that discussed. Now, to Elon's credit, there were some specifics around what Optimus is doing. They unveiled some new parts of showing Optimus picking up batteries and doing stuff in the factory, having a brand new arm. Here's one of these clips where Optimus is now going into production, but I don't know if it's at the level of, tens and tens of trillions of dollars yet.
New Optimus 22 degree of freedom hand and forearm is now in production. And it's learning to walk and catch balls. It's pretty cool. I mean, look, that's where we came from. It's wild. So in a very short period of time, Optimus has gone from being an idea to the most sophisticated humanoid robot on Earth. There's nothing even close to the level of sophistication of Optimus, and Tesla has some important missing ingredients that others don't have, which is our robot has come along.
So again, showing some progress there, but it's not like it's anything too crazy. I talked to a couple of Tesla shareholders last night after they saw this meeting, and they were happy that Elon, said something, but they were also just like, this felt like an earnings call, first 20-minute introduction that Elon does, hyping everything up. It wasn't really necessarily a massive update in terms of what's going on in the context of Tesla, because all the questions still remain about Q1, auto revenues, etc. And so it was needed. But was it necessarily groundbreaking? Probably not. Here's what Elon said about autonomy, and then we will move on from there.
So really, autonomy is a massive, massive thing. The future is autonomous. So I always sort of think, like, what will the future look like in 5 years or 10 years, 20 years? And 5 years from now, autonomous cars are going to be everywhere, primarily going to be Teslas, by the way. But autonomous Teslas will be everywhere. I think in 5 years, probably we'll have regulatory approval, I think, globally. So you'll have autonomous Teslas on every continent, taking people on trips, and almost the entire fleet, which will pass 10 million vehicles next year, is capable of full autonomy. So even without the Cybercab, we still actually have a gigantic fleet that is capable of being autonomous. And the thing about being an autonomous car is that it can be used much more than a car that is not autonomous. A typical passenger vehicle car will be used about 10 hours a week. So people might use it for an hour and a half a day on average for 7 days, which is about 10 hours a week. But there are 168 hours in a week. So if you have a car that's a robot car that can drive autonomously, it can now be used potentially for 80, maybe 100 hours a week. So you could have a car that has 10 times the usefulness of a non-autonomous car, but it still costs the same. In fact, the fleets are already built. So the software update just enables that capability. Overnight, you have an increase in usefulness of 10 million cars that suddenly become like 50 million cars, or maybe 80 or 100 million cars of usefulness overnight.
So again, he's said this for a long time, right? And so this is why I think the event was a bit underwhelming, and the stock is kind of reacting to the event. I think we're at 237 right now. No, we're down 235. Okay, it's going down with the rest of the market. The stock really didn't react to it last night either because nothing that he said was anything that was new. I think, first of all, the meeting caught everyone off guard. So I think all the analysts that cover Tesla from JP Morgan, Morgan Stanley, Goldman Sachs, et cetera, they probably were like, what the heck is going on? And then they started listening to this. And I think they realized, oh, this is just another event where Elon talks about how great the future will be. But it's not really clearing up the concerns around the brand image, him being in Doge, yada, yada. And those concerns are not going to be cleaned up because Elon's not leaving Doge. So it is what it is. You just have to accept it. But it's not like this event showed anything he's saying that's at all even remotely new. I mean, I did not get a single update from this that was super, super substantial other than his theory on how the world is going to go. Now, he was showing or throwing some clear shots at Figure. I mean, he didn't say the word Figure, but it was very clearly saying, hey, the other robotics companies are nowhere near close where we are right now. And as a result, Optimus is going to be the biggest product in the world. He may be right on that, but he's throwing some pretty direct shots from my perspective. It's just a question of if they can live up to the hype. And, the biggest problem with Optimus and FSD over the past couple of years is that it just has not lived up to the hype yet. June, we got the launch in Austin. That's going to be very important. That will be the first case study to see how this plays out. And if it does play out, then Tesla will be in a much better position. I mean, Elon even went so far as saying, and this is why a lot of other people felt this was a little desperate, to literally hold on to your stock.
So what I'm saying is hang on to your stock. So
now, again, he's talking to employees at this all hands meeting, but he knows the world is watching him. And so when he says, hey, hold on to your stock, it's one of those things where he's like, hey, the stock's down 50%. All right. You guys are not pricing in anything I'm talking about. It's time to hold on and relax. But I think from a lot of people, it's a little bit of a sign of like, oh, so you acknowledge that the stock is down a lot and you're telling people to hold on. Right. So I don't know. Look, I'm going to put a poll in the chat. Let me get what your guys' reaction was. I understand the people that feel that it was a sign of desperation. I can get it. It was random, bro. It was so random when this news came out last night. I was like, what? Tesla's having a meeting randomly? Like, I don't think any of the analysts, any of the investors knew, and it just randomly happened. Was this Tesla all hands desperate? My answer is yes, but I also think it was needed. So even if it was desperate, it at least was a good thing that they did. Cool. Okay. Andy says it was pumpy. Yeah, it was definitely a bit pumpy. In terms of the pre-markets right now, Tesla's down with the rest of the markets. Again, today, $4.7 trillion of options will be expiring. S&P 500. Wow, the S&P is down 1% in the pre-markets. Looks like that volatility is already starting. Quantum names got nuked yesterday. All of them, primarily because Jensen had some choice words for some of the quantum companies on stage yesterday. Some of the other CEOs acknowledged that it's a bit far away. And then QUBT had earnings. This is another quantum computing stock. They're down 12% right now in the pre-markets. The market wanted 5 cents of a loss. They brought in a 42-cent loss. And the market wanted at least $200,000 of revenue. They brought in $62,000 of revenue. The company's worth $1 billion. So that one's down 13% right now. Stock was down 11% the day before. Robinhood's down 3%. Lending Tree's down 1%. Trump signed an executive order yesterday after hours to get rid of the Department of Education. I don't think that's going to happen. I think he needs congressional approval to do it. I think the executive order was kind of just smoke and mirrors. But if he did, theoretically, that could benefit SoFi because there would be more private loan demand versus federal loan demand. But as of right now, SoFi right here is down 2% along with the rest of the market. NVIDIA, where is NVIDIA? NVIDIA is down about 1.2%. Okay, my mouse is just being stupid here. Like I just it's the second time this happened today. I just swiped right and then it took away the screen. So sorry, we're back. That's my Mac is being weird right here. But it wasn't even a button. It's like when you swipe a certain way, it triggers the back button on the Mac. And so okay, we should be good now. Hopefully. Yeah, I got tariffed. But yeah, so NVIDIA right here down about 1% as well. And then you got a Nike, which look, they beat expectations, but I guess the guidance wasn't good enough. I mean, they are declining 5% year over year in top line sales. Dividends not really cutting it right here at 2.23%. I didn't listen to the call, but from what headlines I heard on the call, they reconfirmed the idea that 2025 is going to be a transition year. And because it's going to be a transition year, it's not really going to be a growth year. Bill Ackman holding 20 million shares of this company. It is not working out so far. Elliott Hill has not necessarily turned around the company. Maybe this really is a long-term play. Morgan Stanley came out with an upgrade today, and they said, hey, just buy it. 115 is our price target. And so Morgan Stanley continues to be bullish. Or sorry, Jeffrey said that. And they said, bottom line, Nike is getting back to being Nike again. We think this journey takes 2 years, but our call is for a V-shaped recovery in 2027. With shares at 10-year lows on a price to sales valuation, we say just buy it. So you do have some people that are saying that Nike does have some value. Again, I bought this thing at 72, sold it at 74. So we did a quick little day trade on it. But outside of that, Nike is currently down. And then Micron, great earnings as well. They are down 4% right now in the pre-markets. Okay, we got Goolsbie on CNBC. Let's see what he has to say. Hopefully it's a little bit more dovish than not. Pre-market's not really reacting to anything he's saying in a positive way. But let's see what he says right now.
Steve, great to see you again.
Okay, so the last time we talked, you said, tell you the weather, you'll tell me the jacket. And that's part of your way of saying that you don't comment on the weather, you just have to react to what's out there. Okay, so we had the Fed meeting this week, and we learned that inflation is hotter and growth is cooler. So now tell me what jacket to wear.
We're still waiting to go outside. You know, when you got a lot of uncertainty, I do think you need to wait to see some of these things get cleared up. On the policy side, as you know, Chicago's the 7th district, is heart of the Midwest. I'm out talking to business people and civic leaders throughout this region, and there's been a decided turn in these conversations over the last 6 weeks of anxiety, of pausing, waiting on capital projects, CapEx, et cetera, until they figure out tariffs, other fiscal policy. So I don't think we can decide the jacket quite yet. We're going to have to see through this bumpy patch.
I want to get to that a little later, but I'm interested also in this idea that stocks were very optimistic and then they became less optimistic. Business sentiment numbers were up and then they've cooled off a bit. Is all of this the equivalent of an economic shock that could really derail the prior trajectory of the economy?
Sometimes / maybe. It depends how big they are. It depends how long they last. And it depends what form they are. At the end of the day, I still think that the Fed needs to be the steady hand and take the long view. I understand why the market wants to get the information as rapidly as possible and wants to know by Monday morning or by the end of today what's going to be the path for rates, for tariffs, for fiscal policy for the entire rest of the year. But it's not realistic at this moment to do that. There is a self-fulfilling prophecy logic that goes, if everybody talks about prices, tariffs, problems, then it makes those prices, tariffs, problems more likely to affect the economy. But the markets go up, the markets go down. They got a lot of short-run volatility. If you take the longer view, I still think that there's a lot of strength in the hard numbers on the economy. If a Martian came down by parachute and just looked at the unemployment rate and looked at the path of inflation over the last 2 years, they'd be, if they knew what the dual mandate was, they'd be saying that's progress on the dual mandate.
A vacuum in space. You can't have a parachute in space.
That's what you're arguing with the Martians.
I don't know, but you can't have
arguing with the idea of Martians coming
I
down.
just I can't get over that. That you'd be like, whoa.
Yeah, I'm not following the analogies here today either.
Oh, I'm not doing anything. I'm just.
Austin, let me just do one more question here. Just to tell you, we were hoping for an answer to the path of monetary policy by the end of this interview, not the end of the day. But
Okay.
that said, there's a couple different views on the impact of how tariffs work through the economy. There's the idea that there are these one-time price levels, and there's the other idea that maybe because of the specific circumstances of what we've just been through, whether or not there's pricing power in the economy, that they could stick around and create a broader-based inflation. Have you changed your view on this? What are you thinking about the outlook on that?
Well, first of all, let me say I love that if we go to the press conference, there's the reporters asking Chair Powell about economic theory and how should monetary policy react to hypothetical and theoretical changes to tariffs. You know that several parameters need to be answered before you can truly say how should monetary policy react. How long are the tariffs going to last? Are they one and done, or are we on a chain of retaliation and then counter tariffs? And how much are those tariffs getting passed through by the private sector out of just the goods where the tariffs are being applied? So if they're tariffs on intermediate goods and parts and components that are going to wind up being inflation in spillover industries, all of those things matter a lot. At the end of the day, remember, imports are only 11% of GDP. So one-time tariffs that are not followed by retaliation and that do not spread out of what they're initially applied to, they're more likely to be transitory. And
oh my, why are they saying this word? Why can't they say anything else? Like, you can go to Grok or ChatGPT. We have this amazing technology, and all you have to do is type in synonym for transitory. And you don't even have to type in synonym correctly, because I spell it wrong every time. But Grok is so smart, it figures it out, because I can't spell synonym. It sounds like cinnamon to me, okay? It's just so simple. And you could find a different word. Why are they hellbent on this? They know it has triggered us for 4 years, but they still use this word.
On inflation,
well,
and the monetary policy would look through it. Now, you should always be careful whenever you're saying something is theoretically going to be transitory. We learned through the pandemic. So the bigger they are and the more like supply shocks they are, the harder it is to say that we should look through them.
Well, what is transitory then, Austin? I mean, if we see a flow through to PPI or CPI or whatever inflation metric you want to point to, how many months is transitory? How many data points is transitory? What does that mean?
Well, as Steve is the one who coined the difference between transitory and transitory, and so that's why I don't like using that word when they got
but
in
it was
the press conference
used,
arguing
and it was
about
revived
theory.
from that period when the Fed lost a lot of credibility.
Yes.
So people want to know, what does it mean this time around?
The answer to what it means this time around depends on how long are the tariffs in place and whether there's retaliation, and whether the private sector is going to, if they're going to apply the tariffs to intermediate goods like steel. There are a lot of steel users. And when I'm out talking, I talked 3 weeks ago to executives at a major auto industry firm. They said tariffs at 25% would be 100% of their capital budget for the year. So there's a lot of hesitancy to engage in capital expenditure while you're still waiting to figure that out. That would be multiple months and spreading it out of the lane just of the goods that the tariffs apply to. If it started freaking out consumers or businesses, those would be channels by which the tariffs would have an impact that lasted longer and got out of just the 11% of GDP part of their lane.
So the argument he's making is that if we do have tariffs, they're eventually going to go away from the inflation read. Obviously, that word transitory is so triggering to everybody, because the last time the Fed really used that word, and again, words matter when it comes to the Fed because everything they say has like a meaningful symbolic and material impact. It wasn't transitory last time they said it. And so every time they use it now, even if it is the right word to use, it feels like it's the wrong word to use. And I don't think anyone fully believes that tariff inflation will immediately just come and then go as easily as the Fed thinks it could.
So, Mr. President, in the last week, I have had people on here that have told me the economy is really resilient and it's in really good shape, and credit spreads, there's really nothing on the horizon that looks bad. It looks like more of the same economy that we had for the past year. Then the next guest comes on and says, there are so many signs of a weakening economy and in labor, and people are borrowing more, and the consumer is starting to be much weaker. That's like the next guest, Austin. And then we have Fed people on. On one hand, I hear how restrictive the Fed still is, and we need to cut. and the next guest comes on and says, oh my God, I can't believe we cut. Inflation is still in the pipeline and tariffs are coming. We definitely are too easy. I don't know. I mean, it's amazing where we are right now. Can you tell me the answer to both of those questions?
First of all, you better check your booking agent because it depends who you bring on. The economy's huge. If you're a pessimist by nature, for sure you can find things that will make you more pessimistic. If you're optimist by nature, there's a lot in the hard data that's strong. This is why it's not an easy job to be central banker. You got to, what keeps you up at night? Your job is not to sleep at night. You got to think through every scenario. I still think the economy is resilient. And if we get past this bumpy period of some uncertainty, I still think that when the unemployment rate and the job market are settled in at what looks like full employment, if we can continue to make progress on inflation over the long run, I believe that rates 12 to 18 months from now will be lower than where they are today. And if you look at the dot plot, that's still the general sentiment of the whole committee. But when you have uncertainty, it's like I say, I'm in the data dog caucus. There's doves and hawks and other birds, but I'm with the dogs. And the first rule of the dogs is there's a time for walking and there's a time for sniffing, and we need to distinguish which is which. When there's uncertainty, that's the time for getting as much data as you can and sniffing around. But
you know where dogs sniff all the time. Why did you have to?
Joe,
I don't know why he. First, it's the parachute and the. Okay.
Look,
they sniff each other's butts.
Joe, look, I changed the analogy because you didn't like the other one.
Well, now I'm grossed out by the last. I got 3 dogs. That's all they do is.
Austin, let me ask you this question.
This has been the weirdest interview I've seen in my life of a Fed president.
Now there's multiple questions about one's views about the policy rate. Normally, I'd ask you, do you think we're going to do a couple cuts this year? And that is my question. But now there's 2 added questions, which is, what's the timing of those cuts? And why do we get to those cuts in your mind? Do we get there because the economy weakens or because inflation declines? Some combination of both? Can you answer all 3 parts of that question?
Okay, each of those is an important question. When there's uncertainty, you got to wait for the dust to just get out of the air. It's hard to see what we're doing because the dust has got to clear. But waiting isn't free in that you gain information, but you lose the ability to move gradually. So I think the longer you wait, the cuts, when they come, are going to be backloaded. And so that's why I say 12 to 18 months from now, I think rates are lower. But in this period right now, we just have to wait. They're calling for big tariffs to come next month. A bunch of countries have said they're going to retaliate. We've got to kind of work through that. We got to think through the tax cut. Is there going to be a major tax cut, or is it going to be smaller than what some of the things that are called for? And as Chair Powell said yesterday, what matters is the totality, all of these things added together.
AKA, he's not going to answer how many rate cuts we get. You know, this is the difference between Powell, and this is why it's so important to be a good communicator. Powell is saying pretty much the same stuff that Goolsbie is saying, but he's saying it in a way that's digestible, understandable, and relatable from the equity markets, and he's not getting into random headlines. But Goolsbie didn't necessarily do that. I think the analogies were just off on this one. I also don't think anyone wants to hear analogies when, their stocks are down like this so much. Essentially, the core thing I got out of that interview, Micron right here, down about 4%, is that he believes tariff inflation will be transitory, even if that word is triggering for people. And as a result, the Fed is not really concerned about the Trump administration putting up a ton of tariffs. From one perspective, I do agree that if the Trump administration doesn't even get to putting on that many tariffs because we get some deals before April 2nd, then that would be a good thing. And we likely wouldn't have that much inflation from tariffs. But if we don't get that deal, then I don't know if that tariff inflation is necessarily going to be transitory. I guess, time will tell. By the way, Tom Lee just came out and said the market ultimately will rebound from the tariff scare as they did in 2018. So he just said that right now, pretty much his same thesis that he's had for the past couple of months now, and definitely over the past couple of weeks as we've had more volatility in the context from tariffs. Bro's mind was on iOS 4.5. Yeah, he was definitely pulling out a lot of analogies, and it was like at some point we gotta just talk facts about what's happening right here. But again, the Fed can't really say when they're gonna cut rates, and I think that's what everyone cares about. But there's no way Goolsbie can calm the public and let them know that, because all of it is contingent in the context of the data. NEO right here is down 6% right now. NEO did have earnings. They missed on the top and the bottom. For anyone who has NEO, a little bit of an ugly earnings report that we got right now. 47 cents versus 30 cents on EPS. 2.69 versus 2.77 billion on revenue. That is a miss for NEO. NEO will always have a special place in my heart. It was probably one of the first 2 stocks I bought back in 2019 at like $1, and I saw it go up all the way to 60. I sold at like $4, so I missed out on the 60x I could have got. But NEO is basically at the same price that I got it at, $3-4 back in 2019 right here. So it has been on quite the journey. This went down about 5.73%. Carnival Cruise also had earnings today. They are down 1.65. I don't have their numbers yet, but it looks like maybe a little bit of a miss on the top and bottom, or potentially a guidance thing with Carnival Cruise. They had a good earnings last time, so I would imagine it's not too much in terms of something that has fundamentally changed from last quarter. We just got it. Adjusted EPS 13 cents, revenue 5.81 billion. That is up 7% year over year. EPS is down a little bit year over year. They carried 3.2 million passengers, and their occupancy percentage was 103%. So they were overbooked. Yeah, they beat revenue by 70 million, beat EPS by 2 cents. That one down about 1.65% currently at the moment. Okay, cool. That's what we got for Carnival Cruise and for NEO. Now, again, today is quad witching day, which for those that don't know, the technical definition is quad witching refers to the simultaneous expiration of 4 types of financial derivatives: stock index futures, stock index options, stock options, and single stock futures on the 3rd Friday of March, June, September, and December. We are in the first quad witching day of 2024, given it is the 3rd Friday of March. And we have a host of different derivative contracts that are going to be expiring today. And this is what it kind of looks like from a macro perspective. You've got 2.8 trillion of S&P 500 ETF futures and option contracts that are expiring. You have 645 billion single stock contracts expiring. You have non-SPY ETFs, 345 billion. You have the S&P SPY, which is a derivative of SPX, that's 330 billion. And then you have non-SPX index like the Russell, the NASDAQ, the Dow Jones, et cetera. That's 160 billion of options that are expiring today. Does anyone have any calls or puts that are expiring today, either on the bought side or the sold side? I would imagine people do. March 21st, this expiration date has been around for almost like a year and a half now. So you could have even bought leaps from years ago, and they would be expiring here on the day. Yeah, indices, that's a good point, are rebouncing today as well. So Williams Sonoma, DoorDash, Expand Energy, and the other company that I'm forgetting, they are getting into the S&P 500 today. So some of that rebouncing also will. Okay, something's wrong with my computer today, bro. Or something's wrong with how my hands are flicking on the freaking mouse pad, because this is the 3rd time that it happens. Like, you know, on a Mac when you swipe like this and then it just goes back. I don't know why. Like, is this like, are my hands sweaty or something? Is there like, I don't know why this is happening. Like, this is the 3rd freaking time this happened today. I can't promise it's not going to happen again, because I already promised the first two times it wouldn't happen. Oh, TKO. Yes, TKO. TKO is getting in as well. TKO. That's important. So that's what you got. I mean, when do you think Hood will be included into the S&P 500? I don't know, man. They should have got included last time. Hopefully on the June rebalance. Robinhood does have their event next week, which is going to be very important. But, I mean, ultimately, we're going to have to see. It might just take a little bit more time than a lot of us think. But I think it's going to happen this year. I do think it's going to happen this year. And if it does happen, it would be bullish. Overall, the markets just have to be in a better position for it to be long-term bullish for Hood. Let's listen to Gabriella, favorite analyst, right before we get into the market open. We got about 5 minutes. Here's what she has to say about the nature of the stock market in 2025, and then we'll keep going from there.
Okay. The floor is yours. You tell us.
Thank you. Thank you. So the recession probabilities are so tricky, right, to assign a certain probability. We are not at the over 50%, meaning we don't think it's the most likely scenario, but we do think it has moved up versus a month ago, which is to say there's more downside risk to the base case of 2% growth. I think this discussion about soft versus hard data is really interesting. I don't think it's just about consumer confidence not lining up to consumer spending. It's also been the ISM. If you look since the pandemic, ISM services manufacturing would have suggested a stagnant economy. Instead, we got above potential growth. So we'd be careful with extrapolating the soft data all the way out into recession probabilities or specific growth estimates, but there's clearly more downside risk.
Bro, she can stare into your soul. Like, if she was my financial advisor and we were having a conversation, I would just be like, she's staring. Whatever she tells me to do, okay, I got you. Just, I'll do it. I'll do it.
In terms of utilities and more defensive stocks doing well, utilities, healthcare, for example, you were making fun of me about it not being overly exciting, but I'll link it to something that was just mentioned around real assets. Because I think the most exciting way to actually express a lot of the themes inherent in the utility sector is within private markets, within infrastructure. So if you own an infrastructure asset, you benefit as a recession hedge because you got to keep the lights on. People will keep paying you. You benefit as an inflation hedge because you're allowed to raise your utility prices. And hey, kicker, maybe there's also some capital appreciation coming from this rise in electricity demand for the first time in 20, 30 years.
What about, lastly, before I let you go, his comment that, yes, we've seen a lot of upset in those high momentum names. And in his mind, as you heard, the de-risking is not over.
I agree. I think this has not been about the market pricing in a recession at all. The stocks outside the Magnificent Seven are only down 3% from their February 19th all-time highs. This has been
which means the 493 have done pretty well, even if the Mag 7 have gotten hit about 15%.
About a momentum unwind in the Mag 7. I would put banks in that. Remember how well they did last year. And what happened? Really, the Mag 7, for example, peaked Christmas Eve. And what happened since then? Earnings surprises came down. Great is not excellent enough. And we had DeepSeek Monday, which is a reminder that disruption in these technological breakthrough moments is a feature, not a bug of innovation. So I think it's been much more about a momentum unwind from growth to value, U.S. to international, stocks to bonds. After very concentrated years, I think there's more to go in that. There's also more room in case growth does slow down a lot more, and we want to make sure we have some quality defenders.
All right, we'll leave it there.
All right. So, the reason I like Santos is because she's very, very consistent. And her argument for the past really year and a half has been that this is not a recessionary environment. Yes, there are some growth scares. Yes, there is some deleveraging of multiples that have started to become compressed in the context of the Mag 7 simply because they got expensive, which is fair. But that doesn't necessarily mean we're headed to a recession. Now, there is some data we got this morning around credit reports that we'll look at after the market opening bell. And some of that is a little bit worrisome, which kind of goes to the thesis that maybe there is more of a credit problem in the country. But outside of that, in terms of earnings growth and the labor market, we're in an okay position. And hopefully earnings growth in Q1 can live up to that as well. All right, here we go. Friday, March 21st. It is quad witching day. About 5 trillion of options expire today, 9:30 a.m. The stock market is now open. Wake your ass up. Here we go. Let's get into it. NVIDIA is down, of course, 117.08. That's down about 1.2%, basically where it was at the beginning of Monday. NEO is down 5%. Carnival Cruise, good earnings, beat EPS, beat revenue, beat EPS by 2 cents, beat revenue by 70 million. They are down 4%. I wonder why they're down. We'll try to get a deeper look into what's happening. I hope they did not say anything about people aren't going on cruises or the consumer struggling a little bit. If they did give that type of guidance, that could be hurting the entire consumer sector right here. Royal Caribbean's down 2% as well. So maybe Royal Caribbean is getting a little bit of heat from Carnival Cruise. Tesla, which held their all hands meeting last night, which was this emergency meeting for the broader public to be able to look at. They're at 238. They're up about 1%, 239 right here. We got a poll in the chat going on. Do you think that was desperate or not? In the chat, 70% of you said it was desperate. 30% of you said no. 70% said it was desperate. I think it was desperate, but I also think it was just, something they had to do. Micron's down 5% after a good earnings. Qualcomm's down 1%. Robinhood's down 3%. Oracle's down 0.5%. Lending Tree's down 1%. Nike, decent earnings in terms of beating expectations, but not good enough in terms of guiding for a fiscal year 2025 recovery, more like a 2027 recovery. That's down 7.5%. SoFi is down 1.7%. Lennar is down 6%. UPS is down 2%. Dell is down 1%. Palantir holding above 85 right now at 86. That's down 1.5%. SMCI is actually green on the day, 1.4. Tesla as well, kind of green at 239, maybe almost getting to 240. Grab is down 2%. Bitcoin 83.6. That's down from 85 yesterday when Trump addressed the Bitcoin Digital Assets Summit in New York City. Didn't really say anything too different, but he did send them a message. FXI is down 2%. China's down a bit. S&P 500 down about 1%. Amazon's down 1%. Google's down 1%. Alpha's down 1%. Boeing's down 1%. Adobe's down 1.7%. Dollar General's down 0.38%. Of course, Celsius is up because why not? Why wouldn't Celsius be up? But there you go. Celsius is up currently right now. Berkshire's down a little bit, even though it's at all-time highs. Meta's basically flat. Oklow's down 3%. Next Decade's down 2%. Big Bear AI now below $3 at 288, down 4%. Rocket Lab's down 2.7%. Apple's down 1%. Williams-Sonoma is below the market cap requirement to get into the S&P 500, even though they're getting into the S&P 500 today. Suspicious. That's down 2.87%. Hims is down 2%, and Affirm is down 2%. So it's red. It's a red open. Everything is red. The Qs as well, down about 1.15% currently right now. And Verizon and AT&T are green, like always. Dude, Verizon, AT&T, and Celsius, that's like day trading these names, whether it's a growth day or a value day, I would imagine has been good for some people. Verizon, green on the day, 43.76. Same thing with AT&T, 26.87. And then you got good old Celsius at 31.45. I still don't know why Celsius is like algorithmically programmed to go up when everything else goes down and like be pocketed with all the value stocks, but that's what's happening. Tesla, the only one that's green in a sea of red. It looks like whatever Elon said yesterday, particularly around Optimus and FSD and quite literally saying, hey, hold on to your stock, is getting some people to buy. And Tesla should not be green while everything else is this red. Robinhood's down 4%. Usually Tesla falls at that juncture, but not the case today. SMCI right here up 1.94%. FedEx also had earnings. They missed on too much. Oh my God, FedEx. Whoa. That's a little ugly. That's down 11%. Let me know if anyone owns FedEx. It feels more like there was a FedEx problem versus a macro problem. I mean, they didn't really blame tariffs or anything like that. It feels more like UPS, Amazon kind of starting to take a bit more of this pie when it comes to deliveries. FedEx right here at 220. FedEx year to date, this stock is down 20%. It's just as bad as NVIDIA. And I'd rather own NVIDIA over FedEx. So there you go. That one is down. Yeah, guidance was not the best. Guidance was not the best for FedEx. Nike's down 9% as well. So we day traded this yesterday. I bought it at 72. Thankfully, you guys told me to sell it at 74, 75 when I asked you guys. We made a quick $30 and then we gave it away at the end of the stream. But I'm not going to lie, it was really fun to make $30 in 15 minutes. That's an annualized return. Someone did the math of like 10,000% if you do that every 15 minutes. So if I figure out how to make $30 every 15 minutes day trading, some good money. But I don't know if I'll be that successful every time. But Nike right here down 8%. Goodness gracious, dude. This thing. See, and this, I respect Bill Ackman a lot, and he has to have some thesis to have $400 million or whatever he has into this company. But I don't know what that thesis is. At least not right now. Micron. Wow. They really took Micron down, dude. Micron feels like if you believe in this company or this sector of the semiconductor space, this feels like a buy the dip after those earnings. And nothing in those earnings were necessarily a red flag. It was at 109 yesterday. Now it's at 94.50. Also, again, today's quad witching, right? So we're going to mention that a lot. That could be playing a role in the volatility we're seeing and the potential artificial volatility that we're seeing as well. Nike does pay a dividend. It's a very small dividend, but it does pay a 2.5% 2% dividend. QBTS D-Wave is trying to get a little bit of recovery. That was down about 18% yesterday on some of the quantum de-hyping. Rigetti's down 3%. IONQ is up a little bit. And then QBTS, which had a crappy earnings, or sorry, QUBT, they are down another 5%, but they're trying to go a little bit more green. Quad witching is when 4 different types of derivative contracts expire on the 3rd Friday of March, June, September, and December. And so given that we are on the 3rd Friday of March, also happy spring to everybody. It is officially the start of spring, March 21st. Now we are getting all those options expire on today. You know, the weather in Jersey is actually starting to get a bit better. Like even yesterday, I was going for a walk. Like it was actually felt nice to just walk around in Jersey again. So it's not fully resolved, but it's like still cold and chilly, but it's not freezing like it was in January. Luminar's up 13%. Dude, what a week. I mean, we forgot about this story. This came out on Monday. Freaking 17%. No, wait, for the week, they sponsored the Mark Rober video. For the week, they're up 20%. Or sorry. For the week, they're up 37%. For the year, they're up 20%. Incredible. Absolutely incredible right here. The Delta guidance and FedEx guidance is indicative of a lower consumer spending. Yes. I mean, the FedEx guidance I read yesterday was definitely warning that there might be volatility in the context of the consumer. They focused a little bit more on the consumer than on tariffs. So that goes to show you like kind of what they're using to explain why their earnings might not be the best. The NASDAQ right here down 1%. Carnival Cruise down 4.5%. Let me pull up CCL's earnings and see if we have a statement on the consumer from them. But yeah, another company that says, hey, the consumer might not be great. Now, they weren't as dramatic as Delta from how I read their report, but they did blame a bit of the consumer. Carnival Cruise CEO says our first quarter was truly characterized by outperformance. This was across the board and led by incredibly strong demand throughout a portfolio, including exceptional closing demand that exceeded expectations. While we are not completely immune from the heightened macroeconomic and geopolitical volatility since providing our December guidance, we are still taking up our earnings expectations for the year. Wow. And we remain on track to have another stellar year across our cruise brands. So Carnival Cruise going the opposite. They're not blaming the consumer at all. They're not blaming tariffs. They're not blaming anything. They are holding their guidance to be a record year for the company for fiscal year 2025. Interesting why that's down 5% here. Feels a bit more algorithmic versus like company specific. If they're not saying anything bad about the consumer here, and maybe they're just waiting until they get more evidence on it. But as of now, they're not even previewing that. Palantir right here down 2%. Robinhood down 4%. S&P 500 down 1%. Block is down 2%. Bitcoin right here 83.2. That is down as well. The 10-year is down. The 10-year currently is, are we at 4.1? 4.2. So we're not down enough, but we're still at 4.2. At least we're not at 4.3. We're at 4.2. Okay, Lockheed Martin is up 2.6% because of this headline right here. The headline is Trump is expected to award a $20 billion next-gen air dominance contract today. Lockheed and Boeing are in a winner-take-all race to replace the F-22 with a new crewed stealth jet to fly alongside drones. The deal could be worth hundreds of billions long-term. So Lockheed Martin and Boeing are in the running for that award. Both of them green on the day. And that could be the reason why they get some momentum. Where's Tesla? Are we above 240? Tesla 238. Okay, so we got rejected at 241.39. Right now at 238. Again, based on looking at the meeting yesterday, I like that Elon talked to shareholders. I think he needed to after the past couple of weeks of kind of just being radio silent. But it's not like he said anything that was that unique, you know. So now we have to wait until Q1, and we'll see how that plays out from there. Chris does still own Carnival Cruise, from my understanding. He's pretty long, and he believes they can weather a recession if it does happen. So he'll be holding it. Okay, yeah. And speaking of Tesla, real quick, here's a quick video. This came out yesterday. Someone redid Mark Rober's video with the Cybertruck that actually enabled FSD, and the results were the Cybertruck ended up stopping at the wall, but the Model Y ended up crashing. So the Cybertruck ended up stopping, Model Y ended up crashing.
The wheel, not touching the brakes, not touching the gas.
So that's FSD, that's the fake wall, and then Cybertruck ends up stopping with FSD.
Is the wall.
So that worked, which was the opposite of Mark Rober. There's the other angle. So that worked. But the Model Y ended up crashing. So although the Cybertruck ended up working, the Model Y ended up crashing. So that's good. I mean, maybe that's also helping the stock a little bit right now. But at the end of the day, yeah, hardware 3 versus hardware 4. That's Model Y at hardware 3. That's another good point. These were some of the nuances that were missed from the Mark Rober video, and that's why people were upset at him. But Lazar was very happy with the outcome of the video, as their stock right here up 37% over the past 5 days. FedEx, the carnage gets worse, down 11%. SMCI goes green, Celsius goes green, Tesla holds on to its green. Some of the quantum names slightly going green as well. Nvidia still down 2%. Robinhood down 3%. And then SoFi right here down 1.25% here as well. Doug says, I think the Cybertruck has a higher POV. It does see the wall around it. Yeah, and I mean, I think people just wanted a bit more testing, whereas the Mark Rober video felt like it was a one-off, and it didn't even use FSD, right? So that's why people were a bit upset. But I mean, look, his conclusion ended up being right, that the Model Y would end up going into the wall. Meta right here down 1/3%. Tempest AI down 2%. Starbucks down 2.6%. Apple's down 0.5%. It's a pretty bloody opening, but it's not like 4 or 5% down on a lot of names. It's more like 0.5 to 2% down on most of these names. SMCI right here up 1%, in Celsius up 1.6 here right now. VIX is slightly going down. VIX is slightly going down right here. Well, it'd be real interesting if there are some stock sales from insiders of Lazar soon. Yeah, I think that would be very interesting if that happens. Again, I don't care about stock sales from insiders, but when it's done in a more obvious, manipulated way, like after the first biggest pump in 3 years on the stock, then you probably start to get people's attention. I wonder why it's up 20% today, though. Like, why another 20% rally today? What's the catalyst for today? Especially after Tesla had that meeting last night. Were people caught off guard by that meeting? And if you were watching that meeting, how did you watch it? Was it like, were you on X and you scrolled past? Were you on YouTube and you found it randomly? Or did you hear about it just this morning? Because I was doing a Twitter Spaces with Steve, and then literally at the end of our Spaces, we get this notification that Tesla's gonna go live. And I just couldn't believe it. GameStop right here, 24.17, that's up 2.8% as well. So you got some of the spec names doing okay. MicroStrategy, are we up on MSTR? We are flat, down about 1.2% on MSTR. Saw it on X, X notification, off guard on X. Yeah, I think a lot of people saw it as they were scrolling on X last night. OUST up 22%. What is OUST? Oh, this is a small cap. Yeah, 515 million. That one is up 23%. Quantum computing, that one's down 3. Nvidia's down 2. Damn, dude, Nvidia down below 116. It's like Jensen can't say anything to get these. It really does feel detached from Nvidia at this point. It feels so macro, or it feels so algo. It feels something outside of what he's saying, because I don't think anything he said this week at GTC is bearish, or feels like it could be bearish. Tesla at 242. Tesla going the opposite of the entire market right here. This is either retail buying into it based on what Elon said, or some funds pumping it up to dump it by the end of the day. But we do have some green here right now. Are you buying more Nvidia, Vit? I bought some shares what is it? I bought some shares yesterday, or not yesterday, a couple days ago. But yeah, I have 805 shares. I want to build out the full 1,000 shares, so eventually I have to buy those 195 shares. Look who's calling in right now. Does he know I'm live? Let's see. Derek, you're live on the show right now.
Oh, geez. Hi, everyone.
What's up? How are you?
I'm doing good. Good morning. No, just call me later. I'm sorry.
Okay, well, real quick before you go, yeah. What was your quick reaction to that Tesla all hands meeting?
I was more shocked this morning when I woke up to realize there was probably 1 million people that posted that Elon told his staff to not sell their shares.
Oh yeah, he did say that. Yeah.
That was really shocking. Just as a founder and like it's a securities thing, right? It's advising people. I was shocked about that. Knowing that what he knows means something he knows, right? Like that was shocking. I think that's why you see Tesla up today. It was a Musk that I have yet to see in years. He looked healthy. He looked right-minded. It's shocking that he has 17 jobs and he was able to deliver a great message to all hands. And I was very, very impressed. He didn't look disheveled, beat up. And imagine, I mean, the guy is, basically running the White House as well. So for him to pinpoint where they're at from a production, from cars, from robotics, from cybercab, it was probably the best thing I think he's seen him in regards to Tesla outside of earning calls. I was shocked. I didn't know if the stock would be down 100% today or it was going to be up.
Did you feel at all? Did you feel at all it was kind of desperate by them by any chance, or?
Are people saying that in the chat?
Yeah, 100%.
Yeah. I think it was the first time that they put all hands live because it is desperate.
Yeah, I think people just wanted to hear more.
I think the Q1 earnings are going to be so bad that we're going to see $150 share. I mean, I mean, like last night, Steve and I bantered around this on Spaces, and there's nothing can hold up a stock that's losing market, that's losing margin, and they're losing a lot, right? Their whole company is bet on robotics. It's bet on cybercab. It's bet on autonomous driving, and it's not there yet. It reminds me of NVIDIA when NVIDIA crashed to $1. And he just kept putting money into this infrastructure over and over and over. 10 years. People forget.
No.
So yeah, I don't know. He looked great. Like I was shocked.
He looked good, right? He didn't look like he was high or anything.
Yes.
Like he looked good.
Like he had his face slipped or something. I don't know. Who knows?
Yeah. All right, cool. Thank you for your thoughts. I will call you later.
Have a good day, everyone. Bye.
Yeah, later. Derek continues to buy Tesla. I mean, he is obviously a fan of Elon, and he continues to buy the stock, but he also does, acknowledge the reality of it, that it could tank pretty aggressively after that Q1 earnings. In terms of Elon's look, he did look healthy. I mean, he didn't look like he was high, first of all, whereas that meeting he did at the Republican convention or something, when he had the glasses on, he looked very high. He looked high as hell. This one, he looked a lot more normal, natural. He was talking in like coherent sentences. He wasn't really stuttering. So it's like, I don't know. It was one of those things where he didn't look too crazy, and he was, doing what he ultimately has set out to do for years in terms of playing out his vision. It's been so long since we've heard from him, ever since last earnings, about anything other than politics. Someone did ask him a question about the stock market, which was also really interesting right here. So let's take a look at this. This is the first time I've ever heard Elon actually talk about it like this, but someone said, "Hey, Elon, what's your advice for someone who wants to get into the stock market?"
What advice would you give a young person like getting into the stock market? Like,
stock advice. Wow.
Yes, sir. Yes, sir.
As I think people can perhaps tell who are watching this, these questions are not prepared in advance. This is literally random questions from the crowd, which is cool. I'm fine with that. And
see, he looks happy. He doesn't look too different. He's probably annoyed that the stock is down, and that's why they even did this thing. But he doesn't necessarily look distressed.
I think that it's going to sound very, very straightforward, but you want to really buy stock in companies where you think the products that company makes will be better in the future. Is that company going to make more and better products, or like do you love the products that company makes, and are they going to keep doing that? And like I think Tesla, as I've just gone through, Tesla has a track record of having made many great products, and we're going to make many more future great products. and we're going to scale up production. And I think we've demonstrated a level of innovation that is extremely rare. I mean, certainly by far the most innovative company in the car industry, like not even close type of thing. So, like I do think Tesla stock actually I think long term with Optimus and self-driving, Tesla will probably be the most valuable company in the world. But there are also other companies out there that make great products and services. So I think that's the way you want to look at it. Say like, do you think this product, because that's the reason why companies exist, is to make great products and services. So if you think that a company is going to improve over time, then buy the stock. And if you don't, then don't. And then the stock market it's a very strange thing. It's kind of like, I think it's Warren Buffett's sort of metaphor or analogy is, the stock market's like having someone stand at the edge of your property or your house and yell prices to buy or sell your house every day. And like sometimes they take their meds and sometimes they don't. So sometimes the person yelling out the price of your house is having a good day, and sometimes they're having a bad day.
So that was Elon basically on the concept of how to invest, and then obviously plugging Tesla as one of the more innovative companies that's out there. Palantir going green right here, 87.65, getting a little bit of market momentum turning as we get 20 minutes into the open. But one of the core things I took away from what he said right there, Tesla up 3%, is you buy stock in companies that you believe they will have products that are relevant in the future. Now, obviously, that's a little bit more of a simplistic understanding of investing, because if you buy stock in a company that will be relevant in the future, but their valuation in the present day is more than indicative of their future growth potential, you are probably paying too much, right? So there's nuance in terms of how you decide to enter into a position. But the core premise, I think he's 1000% correct on, will Tesla have products that are relevant in the future versus a lot of the other OEMs and companies like Uber, et cetera, that could be hurt by something like a Tesla? Yeah. It's up to them to execute, and that's where the company, you have to believe they've either proven execution or not. But that statement alone, along with a lot of the other stuff he said for the past hour and that hands-on, maybe that's why it's up 2.2% right here. Kind of people just believing in Elon's vision again. But whether it's Derek, Steve, or any other analyst that I look to about Q1, it really does feel Q1's not going to be pretty. And so if you're buying at 242, it's just a question of, all right, we've bottomed. Even if Q1's not pretty, this is the bottom. And I just don't know if that's the case, because we were at 215 last week. And so to say this is the bottom, unless we're calling a market bottom here, I don't know. Eventually, we're going to have to find out. Palantir right here, slightly going red. Archer's up on the day as well. Tesla 241. MicroStrategy's a little red. SPX, I think we are still red on that. S&P is still red at 1%. Until that changes, most of these stocks will still be red. Optimus is exciting. I tend to agree with Steve on FSD. Yeah, Steve's not a believer in FSD at all. And now, granted, I think Steve's a little off on this take, because Steve has never really experienced FSD. And that's because he ideologically loves gas guzzling vehicles, and he's just opposed to the concept of an EV. But like, he's never had an FSD drive, because once you've had that drive, dude, it really makes you feel in the future no one should be driving. And that gets you into the world of like, all right, what is the autonomous vehicle market going to look like? One thing that Elon did say on the emergency hands last night is that, the future is autonomy. There's going to be millions of cars that are Teslas that are driving on the road. That doesn't take into account the competition part from Waymo and some of the other smaller companies that are playing with this, like BYD as well in China, which is a much bigger company. But Lyft wants to get into it in the summer. Like, there is going to be people attacking this. Maybe Tesla is the winner out of all of them. But I think Austin's launch is going to show us, can Tesla actually compete with the Waymo, Ubers of the world in partnership by themselves? If they can, I think we'll get a deeper understanding of what happens with Tesla. Yeah, I mean, the TAM question on if it's smaller than what bulls say, I guess that is also up for debate. This is, Kathy thinks, he also even referenced Kathy in the thing yesterday. Elon was like, yeah, if you look at Kathy from ARK Invest, she knows what she's talking about when it comes to Tesla. So it was like, she's been right about Tesla. You should listen to her. But she thinks like there will be a gigantic TAM being created as a result of this robo-taxi opportunity. And I guess in the coming years, we will see if that plays out. FSD just means the cars are four-wheeler robots. That is correct. Why did the market take such a tumble this morning? Again, I think it's a bit more of that quad witching that we've got going on today. $4.5 trillion of options that are expiring. In terms of a fundamental reason the markets were red, I don't really see one. Trump didn't tweet anything. There wasn't really any major news last night. It is a Friday, so you could say, because it's a Friday, we're getting some pain. But outside of that, doesn't feel like anything too crazy. The 5-minute charging by BYD, that's a good headline, but the voltage required in order for that 5-minute charging to actually be universal is not necessarily there yet. So yes, it's great that BYD can charge in 5 minutes, but I don't know if they have the infrastructure yet to definitely get consistent 5-minute charging across China. At least not right now. These were the charts that came out this morning as well when we're looking at credit rejection. So Bloomberg put this out today. 34% of people think they'll be denied an auto loan, 48% for a mortgage, 32% for a credit card, and 39% for a credit limit bump. A record 8.5% aren't even applying to credit cards because they assume they'll get rejected. Just 63% say they could cover a $2,000 emergency cost, the lowest that's ever been recorded. So in terms of credit card limits, auto loan applications, credit card applications, and mortgage applications, you've got a good chunk of Americans that feel they would get rejected if they went to apply. And that continues to put fire on this argument that there are some credit issues in the United States that could start to manifest themselves either in consumer confidence, which we're kind of already seeing, given it's the lowest since 2022. It could result in Q1 sales if people are pulling back their spend. And it could also result in defaults and delinquencies. I mean, the headline I saw yesterday, which I don't know if we talked about it on the close, we probably didn't, but DoorDash is partnering with Klarna to buy now, pay later your food from DoorDash. So now you can pay in 4 installments for the $25 of McDonald's that you order on DoorDash via Klarna. I think this is good for Klarna's IPO because now they're getting all these deals with DoorDash, Walmart, etc. So that'll hype up the IPO. But B, it's one of those things where it's like, all right, so people can't afford to DoorDash food, which is why they need to split up the payments. Like, how bad of a credit problem could that possibly create if people legit need to finance $20 from food? And don't get me wrong, DoorDash and Uber, those can be definitely expensive. Like Uber Eats, all that stuff, because sometimes the fees are ridiculous. But still, it's one of those things where it's like, okay, if everyone needs to finance that, buy now, pay laters on burritos, only in America, right? Yeah, that could be an issue.
Buy now, pay later firm Klarna. This one is landing and partnering up with DoorDash. In the coming months, customers will be able to use Klarna services to purchase groceries, retail, and a Dash Pass annual plan. And customers will have the option to pay for their purchases in full in 4 equal installments or defer payments to a more convenient time. Here, shares right now of DoorDash up by 1.5%.
Yeah, and I'm not proud to admit this, but I am a Dash Pass member.
Really?
Yes, I am.
How long? Member
For
since?
like 2 years now.
Okay, since 23.
It's a good deal. It's a good deal. But for DoorDash, this is their first buy now, pay later partnership. We've seen this shift in consumer sentiment, this decrease in consumer confidence, this expectation that we're going to have inflation elevated over the long term. And we know that a lot of consumers, they've been pretty squeezed when you go to the grocery store. So the fact that we're seeing this buy now, pay later partnership for DoorDash, I think could be a positive, hence the share uptick that we're seeing today. But
it is weird though, bro. For all the things to buy, if you have to buy now, pay later, a $25 Uber Eats or DoorDash delivery, like I don't know, dude. Just like gut feeling, that feels like we've got some issues when it comes to credit. Robinhood getting back to green, baby, 41 to 43. This one getting a little bit of a nice base right here, around 42, 43. Neo's recovering just a little bit. Carnival Cruise still down 5%. Royal Caribbean down 3%. The Q's, some green candles right there. NVIDIA not going green. It's going worse, even though Tessie is green. Tesla going the opposite of NVIDIA. And then in the other Mag 7s, everything else is red besides Meta. Meta and Tesla, the only ones that are green today. Oh, Robinhood had an offer today. Oh crap, I forgot. They had an offer. Holy crap. Hold on, what was the new offer? This is the final gold offer before the event. The third offer is going to start a blockchain reaction. Wow. Hold on. 1% boost on crypto. Get 1% boost on crypto through March 31st, so 10 days. The more crypto you deposit. So does this mean like bringing your crypto over from a different platform? Yeah. Yeah, I think that's what it means. Wow. There you go. All right, so if you've got a ton of crypto on a different platform and you want to get 1% on it, it's going to be good for net deposits, going to be good for AUC, going to be good for crypto momentum. That's not horrible. It's paid in USD. It's not paid in crypto. The 1% you get paid in cash in USD. It's excluding USDC, but if you have Bitcoin, Ethereum, etc., all that stuff, then there you go. That's not bad for HUD. That's not bad for HUD at all. I think that's good. Robinhood recovering right here just a little bit, 43.29. Tesla still 240. So they're doing a 2% brokerage transfer match. By the way, I've been getting a lot of messages. I had a guy message me last night. He's bringing over 1.2 million from Schwab to HUD. And the ironic thing is 70% of his portfolio is HUD at a $17 average inside of Schwab. And so Schwab's offering him like 1.5% to stay, but he's probably still going to leave. So I think we're going to get a crap ton of net deposits in Q1 just based off these assets that are transferring. And then now you have this crypto thing that could create even more momentum. So, and then you have the 2,000 gold bars they're giving away. So you got a lot of stuff. And then you have the event next week. So you have 3 giveaways plus the event coming up. They already gave away a couple $1 million in Bitcoin and Dogecoin on the trivia stuff. It's been a pretty strong month for them, even with the stock taking a bit of a dip. Yeah, I wonder what that's going to look like. I wonder if you want to transfer from Coinbase to HUD, because a lot of people, to Coinbase's credit, don't like having their crypto on HUD because it's not really cold wallet. It's like just like a derivative of your crypto, not exactly your crypto. So there are reasons why people don't like having their crypto on HUD. But 1%, if you got a big crypto portfolio, is not too crazy. SoFi's red, UPS is red, 3% following FedEx. S&P still down 1%. Dell's down 1%. Nvidia still down 2%. The Q's down 1%. S&P still down 1%. Hoodie trying to recover. Tesla, Archer, MicroStrategy, and Celsius, kind of the only names that are relatively green. Celsius up 3%. Celsius getting some love. And then SMCI right here up 2% as well right now. Schwab offering him to stay is interesting. Are they worried? Well, Schwab's been doing this for the past couple months. Schwab's been, for the past year, because I've had people reach out to me that said, they try to hustle with Schwab and be like, hey, I'll stay if you give me 3%, and try to juice them. But then Schwab ends up like just caving in. And so a lot of people end up leaving. But yeah, Schwab's been trying to give you 1 or 1.5 to stay with them and like give you some other perks like lower margin or whatever. But they haven't really been able to compete because they just can't do it for trillions of dollars of assets, right? It's just too expensive. Now, granted, Schwab still has so many more assets and users than HUD. So even with people leaving, it shouldn't really be hurting Schwab that much, but it still hurts to an extent when millions of dollars leave, even if it's not tens of billions of dollars. How are you guys not concerned about this Klarna thing? Look, it is concerning. It's one of those things that feels more meme-ish to me more than anything. Buy now, pay later for your food. Like, it's one of those things where, like, even if we didn't have a credit problem, I feel like Klarna would still do this with DoorDash because it's just another fancy American name they can partner with. Remember, Klarna's not an American company. They're a Swedish company. So they need a lot of American partners in order to hype up their IPO, which is why I think it's really happening. But I think it's more so a question of if people are actually buy now, pay latering a $20 meal purchase, which hopefully is not the majority of people. But yeah, that could definitely be a little bit of an issue. Joby's green, Celsius is green. Amit, is that a lot of giveaway? Will that hurt HUD? Well, look, HUD has the unit economics to make the giveaways work, and they've proven that over the past 2 years. So to my understanding, they can match the 1%, 2% deposits and immediately or not immediately, but like a year and a half later, make back that money, and the value they get from getting you as a gold subscriber and then getting more engagement from you. It's a real ecosystem they built to make these make sense. And they proved it can make sense, for the past 8 quarters in a row as they've done this match. This whole matching your money stuff initially started as a 1% IRA match back in 2023. And since then, it's expanded into what it is today. But it's been a really strong program that has just been backed by a lot of R&D and cohort analysis to get them to do this. Tesla right here at 241. Where is Palantir? Palantir at 87.52. I think we get Palantir earnings mid-April. We have about 10 days left of the first quarter of 2025. I think Palantir will grow more than 30%. Question is going to be where the macro is when they report. But it definitely feels like momentum has been plentiful on their side. And yeah, we just got a lot of deals. I uploaded a bunch of interviews last night for those that saw it. I think the TWG interview was one of the best interviews. I also talked to Jeff, the Red Cat founder. I know a lot of you guys like that stock, and he's just a super awesome guy. And again, if you watch those interviews, they're just really explaining how transformational Palantir is, and they're not getting paid to say it. In fact, they're paying Palantir, So it's like, it's one of those things where it's seeming like the momentum should be pointing to the right direction. I think Steve's coming out with an article today on Palantir on Seeking Alpha with like a $30 price target or something. So he will definitely be triggering a lot of Palantir shareholders, but I don't think we go to 30. I think as long as we have a good Q1, macro's okay, then hopefully Palantir should be in a decent spot. Elaine says they were great. Thank you for watching, Elaine. Yeah, hopefully those interviews were good, dude. Hopefully it was fun. They gave me a nice little room at the back of the office to do it in, and the guests were just awesome. They were really, really able to explain why they like Palantir. What happens to Hood in the crypto bear market? Me and Jason were talking about this on Tuesday. I think in a crypto bear market, like a legit crypto bear market, Hood gets crushed. I don't know if we're there yet or if that happens, but we're gonna have to end up seeing. But if Bitcoin goes down to like 50K, yeah, Hood's gonna get a little bit of pain. And I think we got to be ready to see if that happens. All right, let's get some updates on macro, the Fed, some of these earnings, and then we'll keep going from there.
Executive mentioned weakness or softness in the industrial economy at least 9 different times. More on that story ahead. Nike's also under pressure, warning sales will drop by a double-digit percentage in the current quarter. That's the fourth quarter. The company facing new tariffs, sliding consumer confidence, and slower than expected corporate turnaround. The Street's take also coming this hour. And then watch Lennar, the home builder, posting a top and bottom line beat, but the company's chairman calling out a, quote, challenging macroeconomic environment due to high interest rates, inflation, and
if the 10-year comes down, mortgage rates come down, that should be good for Lennar, but right now we're not in that situation.
Limited supply of affordable homes. More on the housing trade later this hour. But Mike, another day we have declines just when we were starting to wonder if we were finally going to eke out a gain for the S&P this week, break the 4-week losing streak, find some sort of bottom or short-term bottom in some of these beaten down tech stocks. Here we go again today.
Yeah, pretty apprehensive. I've been referring to last week's low, which, culminated with that Friday rally, as a credible one, a plausible one to have it be a short-term low, but not necessarily one that was a slam dunk, that this is done. We barely got to 10%. You didn't really get a lot of the signals looking super washed out. It has been largely Mag 7 driven. Year to date, Mag 7 down like 14%. Rest of the S&P is actually slightly positive at the open.
I showed
today.
the equal weight.
Yeah.
493 were positive year to date, while Mag 7.
And so, there's room for adjustment. And I think the idea of a tightening consumer spending situation is obviously getting into the market a little bit more than it had been before. What we know is 40% of 10% pullbacks in the S&P 500 go on to 15% or more. So the majority don't, but a lot do. Most, even if they're successful at just a 10%, get some kind of a retest period. And it's just hard to see, knowing what we know is coming in terms of April 2nd. And in terms of first quarter earnings season, which I think there's a lot of concern starting to build up around pre-announcements and what guidance is going to look like, it's just hard to see people feeling comfortable saying something's going to come along to make me raise my estimates here. And it just that I think makes it tough for the market to sort of get up and away.
Well, that gets into what Jim Cramer was just talking about, which is value being created, but timing, he's not going to go there because, look, it's hard to step out in front of this April 2nd time when we are set to get the reciprocal tariffs from the White House. I wanted to zero in on that for a moment. Bank of America had a good chart about what's happening overall with tariff.
Trump is going live at 11 a.m. I don't know what he's talking about at 11 a.m., but he's going live at 11 a.m. in about 50 minutes. He does not go a day without going live, but he's like me. I go live every day, but he will be going live in an hour.
Rates relative to history. And the arrow there at the right shows that we are set to climb. I mean, tariffs overall, if you blend them together, more than 10%. And it's taking us back to levels that we haven't seen since the 40s.
Yeah.
Smoot-Hawley with the 1930s that helped get us into the Depression. And you can see where that's significantly higher, but we don't necessarily want to go back to that.
No, exactly. And not just didn't want to go back to that. And look, I keep saying we have to leave out there the possibility, it's not likely, but the possibility that the punch could be pulled. Maybe it's not going to be as immediate or across the board or aggressive. We don't know that. Right now, you have to assume it will be. But the degree to which Wall Street was not willing to believe this was going to be the first step, okay? So let me just read something. We find it unlikely that across-the-board tariffs, as currently reported by the media, would be enacted at the same time as President Trump moves to fix the immigration crisis. The tariff gun will be always loaded and on the table, but rarely discharged. Written by Scott Bessent as his last investor letter, January of 2024, at Key Square Capital.
That's a good find.
That's just is sort of exactly what characterized the Wall Street view. He also said tariffs are inflationary and would strengthen the dollar, hardly a good starting point for U.S. industrial renaissance. He actually thinks that the president would be wise to be running a weaker dollar policy. I think he is trying to do that as U.S. Treasury Secretary right now.
Without saying it.
Without saying, of course. But I mean, I think that, the idea that you want to create the conditions under which longer-term yields come down, you acknowledge the idea that we could have a soft patch in the economy and it's going to be pain before gain. My point is just that the reason the market's throwing a tantrum is that they just didn't price it in, at least mentally.
Yeah, I agree with that. And then obviously you got the quad witching today that's creating some other issues as well. Pound to right here, 87.15. That one's slightly down, robbing it down about 1.2%. Tesla not holding 242. That's down at 239. Perplexity, private startup, they doubled their valuation from 9 billion to 18 billion. That was very surprising to me. I did not expect them to be in talks of raising at that valuation. That to me feels, again, just to be honest, it feels bubbly. Like it really feels bubbly. I don't know if Perplexity deserves to be worth, like in the public markets, do we think Perplexity would get a $20 billion valuation? I mean, like there's a lot of stocks right here that are barely holding on to their valuations, but I don't know. So even seeing stuff like that, it feels like, all right, it's better to be in the private markets than in the public markets right now. Like if Nvidia can barely hold on to its multiple, I don't know if these companies that are dependent on Nvidia can hold on to them. 115.80 right here on Nvidia. That's down about 2.8%. Here's the coverage right here on Perplexity.
Hey, Kelly, yeah. Speaking of AI, startup Perplexity, I'm hearing, is in talks to raise another mega round of funding that would roughly double its valuation to $18 billion. This is according to a source familiar with the deal who asked not to be named because it's not public yet. It is still in the early stages, I'm told. So those numbers could change. But what I'm hearing so far, $500 million as a part of this round, that could go even higher. It would put its post-money valuation at $18 billion. I'm also told this company, Perplexity, has a $100 million annual recurring revenue rate. So Bloomberg did first report this one. The company declined to comment, but Perplexity is trying to take on Google with a search engine. Kelly, we were just talking about it. It offers APIs as well, uses a variety of different models, Anthropic and OpenAI.
Perplexity is coming out with like an agentic browser soon, which should be interesting. I don't think they're a horrible company. I think Perplexity is amazing. The founder is awesome, all that stuff. It's just 20 billion on 100 million ARR. Definitely not profitable. I mean, investors are obviously paying in the private markets for like the idea that they're the next Google. Like that's the only reason you're buying Perplexity. You think they could legitimately have a chance to beat Google or get anywhere near Google's valuation one day. I don't know. I don't really see it. At least not right now. But the point is, if they can raise the money, it's smart to raise the money. And it's just going to be a question of how that reflects in the public markets. NVIDIA right here still at 116. Tesla, again, holding on to its green. Everything else still red for the day, except Meta, a little bit of green there. But Tesla, 238 and not declining right now. Dharma says, I've been using Perplexity Pro for well over a month and compared with Grok, and I see it's a lot better. Yeah, I mean, they definitely have a differentiating factor from the traditional LLMs, given they're a bit more of a search engine that contextualizes and synthesizes all the data versus just giving you a direct response. I just use Grok more and more, but the fact that it's so interchangeable, I think, speaks to the lack of a moat, even though there is a user base that does get a ton of value from it. And they're growing. They are not growing. It's not like they're not growing at all. I think it's over 300-400% every year in terms of users and revenue. Sachin says whether Perplexity deserves 20 billion is not a question. Whether it will get 20 billion in public markets, yes, and much more, as no big pure play LLM is publicly traded. Supply demand is skewed. Yeah, I mean, look, at the end of the day, investors do want exposure to AI, and I mean, it speaks to why Palantir is getting its valuation. And I have said every single day for the past couple months now, Palantir is expensive. It's still expensive right here, but Palantir gets its valuation because the market believes that they have a moat that is uniquely transformative when it comes to software and enterprise AI. So if Perplexity was public, the market would have to interpret their version of distilling LLMs to be able to create meaningful responses would be a moat. And maybe one day they go public and we see if that ends up playing out. They seem like the easiest candidate for a buyout, though, right? Like, I feel like one of these big guys would take out Perplexity over the coming years. SMCI right here up 3%. Looks like they got upgraded by JP Morgan today. Yeah, I believe that's why SMCI is getting a little bit of a lift right here. JP Morgan SMCI. 45. They're upgrading. 45 from 35. They said, we are upgrading shares of Supermicro as the company has cycled past the uncertainty in relation to the pending SEC filings and is on the cusp of benefiting from the ramp in Blackwell-based server shipments. With positive data points in recent weeks relative to better supply ramp from NVIDIA, we are raising our revenue forecast for the next 12 months, but remain cautious on gross margins, expecting margin moderation in fiscal year 2026. Okay, so that's why SMCI is up. That's why SMCI is green. Dude, they were at 67. This was a week before they filed with the SEC. Then they filed, fell all the way to 33. That's when the market kind of crashed. And now they're back to 40. So this one's been an absolute journey the past couple months. Tesla still holding on to 238. Archer's at 830. S&P's down 1%. And then Hoodie right here, 43.21. That is also down 1%. Why is Celsius pumping? Your guess is as good as mine. I have no clue. I've been struggling for a long time to try to figure this out. I do not have an answer. Let's get an update on Apple. Here's Bryn on her thoughts on Apple right now, along with the Siri delay that was announced a couple days ago.
I mean, they need to do more than shake up. You know, I sold half my position in December. I'm in that camp of Steve of saying the people that thought we were going to have some super cycle, I never saw that even remotely happening. Apple has a Trojan horse in Siri. The problem, though, is that horse is still in the barn. And that could ultimately be the AI agent that everybody uses. But the problem and the vulnerability with Apple today is Apple is a hardware company. They've always been a hardware company. 75% of the revenues come from hardware. They are now reliant on third parties to do a venture with them, whether it's Baidu or Alibaba in China or OpenAI here. And I think that makes them incredibly vulnerable to being able to pull this off and actually have an upgrade cycle, which is what they need to get revenues going, because this is a hardware, not a software company.
Yeah. Why do you own the stock? Sounds like you don't really want anything to do with it right now.
No, I just think it's going to be, a market performer. That's what I thought last year. I cut the position down in half because I felt there was too much euphoria and too many people saying, we're going to have this super cycle. So I was like, no, my money can be elsewhere. I'm talking with earbuds. I have all the Apple. I have incredible respect for Tim Cook and his team, but who is their Mustafa Suleyman, right? And so it's like Microsoft hired Mustafa Suleyman, who, for those who don't know, co-founded DeepMind. to go and run their AI. They need a big person outside, like Microsoft hired Mustafa, to come in and really take the reins, because I think we're in uncharted waters for Apple. So we'll see. I think it'll be a market performer, which may not be great this year, but I'm definitely not ready just to completely sell the stock.
I think they need the Vision Pro to not flop, or they need another product. I don't even think they need. I just think they need their next S curve. That's it. Like, I think that's what gets people excited about Apple again, because the buybacks are not enough right here. But again, even as I say that, Apple is Apple, and Apple goes with the market. So as long as the markets hold up, Apple should hold up. But I think they need the next big product that would make it work. Shout out to Flow Sounds. He says, I'm in jury duty today in Brooklyn, but tapping into a midstream for inspiration. Flow Sounds, thank you for being here. I have yet to do jury duty. Last time I got out of it because I had to go somewhere in DC. But shout out to you being in jury duty. Jury duty has always been one of those interesting concepts, dude. It's like as an American, you should want to do it, like you have to do it. But it's also like, if you don't have a job like me, it's like you really, like, you can't just leave for a week to go to some trial. Like, that's just not going to work. But yeah, for those that have engaged in it, it's what you got to do. Wow, it pays $40 a day. They pay you to do that? I thought they don't pay. Well, at least it's something. Amit had a meeting in a little room. That's how he got that. No, I just filled out this form and I submitted it to them. And I'm like, hey guys, I can't do this. Like, I have to do a show. Like, I can't not do the show. Because the jury duty, it could go on for like weeks. Like, they say it's a week, but it could go on for 1 or 2. And you have to be there from like 9 to 4 every day. And it's like, all right, this is like not possible. At least not right now. All Apple will have to do is to sell the Vision Pro for $450, and you'd be using one right now. You know, look, if it wasn't 3,500, it was 450. I agree. Yes, they would have more market share, but I disagree that I would be using it right now. And this is one opinion I'm proud of that I've been consistent on for like damn near 2.5 years now. As soon as I saw the Vision Pro, my first take was no one's going to use this thing. And I feel like I've been vindicated on that take. Like, it could have been $200, $300. Like, no one was going to use it because it doesn't have a use case. Like, no one wants to put on a headset and then operate their day-to-day life. It sounded really cool. The Vision Pro should be studied in Harvard Business School because it sounded so cool with their demos and their videos and all these multiple screens, and you're like touching this imaginary keyboard to type. But in reality, no one actually wanted to engage. Like, consumers just didn't vibe with that. And it's like sometimes in a consumer-facing market, you never know what the consumer is going to like. And you've just put out the product, and sometimes it's a hit, sometimes it's a miss. And this one, a rare miss by Apple, but it was indeed a miss. Like, just no one cared when it came out. Yeah, remember when people were walking down streets? It was hype on YouTube for like 2 weeks. People were doing reviews. People were on the subway wearing it. And then just no one cared. No one cared. Yeah, there was a lot of videos of walking with it. Even if they had more apps for it, though, like I was just never a big fan of the form factor of wearing this on your head. Like yeah, they never really got a developer community, but the idea of putting it on your face every day and then like moving throughout the day, I feel like it was just never something that made sense to me. Now, Meta's glasses make a lot more sense because it's not this like massive goggle that you're putting on. The question will be if those glasses can really mix an augmented world with a physical world. And those should be out, I think, in 2 years is what the timeline is for Meta. But yeah, the Vision Pro was just never a thing. And so we don't have the cars. We don't have the Vision Pro. We maybe are getting robots from them. Who knows? But like, I'm just left wondering, is it iPhone 28? Is that going to be the next big thing? Like, what is there for Apple? Does anyone own any of the Ray-Ban glasses? Do you guys use like VR, AR headsets on your day-to-day life? Because I don't. Like, I'm on my phone all day, but outside of that, that's why I don't even use an Apple Watch, because I'm like, why would I use an Apple Watch? I just use my phone. Like I know some people wear it for the health stuff, to count their steps, all that stuff, but like outside of like responding to a text with my Apple Watch, I would never do that. I just do it to my phone. It's just, I've never used other devices to make sense of the phone itself. McAdam Stanley says, I have the Ray-Ban glasses, forget the purchase because they're a toy. Yeah, I think a lot of people feel that as well. I have the Meta glasses, rarely use them. Nice for music in the office when you need your ears. You know, my son stays on his Meta Quest. His generation will understand not wearing one. Well, for the gamers, I think there's definitely a market. There's a big market. But I'm also just not a gamer, right? So that's the other reason I don't use it. Okay, let's get a couple more updates with what Goolsbie said today, and then we'll get into a few other headlines we've got right now.
How the Fed will or will not respond.
Yes, definitely, Sarah. But first, I want to talk about Fed Governor Chris Waller, who put out a statement regarding his dissent. He said the Fed should continue the current pace of decline to the Fed balance sheet. He made clear in his dissent on Wednesday that that's why he was dissenting. He agreed with monetary policy or keeping rates unchanged. He said reducing the balance sheet is, quote, an important part of normalizing monetary policy. Remember, the Fed went from running off its balance sheet from $25 to $5 billion for treasuries. He said the Fed should slow or stop it only when we get closer to an ample level of reserves. At over $3 trillion, he says reserves are abundant. Let's talk about Austin Goolsbie, the Chicago Fed president. He talked on our air about the outlook for tariffs and monetary policy. The market looked to get a bit of a chill from his comments, and it may have to do with how long it's going to take the Fed to figure out, are the tariffs transitory when it comes to inflation or something worse?
The longer answer to your question of what is transitory, I think, is 1 month is definitely transitory and many months is not transitory. So it's somewhere in there.
Okay, he said there's been a decided turn in anxiety among the officials that he's talking to. Corporate executives he's talking to. Business is pausing on capex because of this tariff uncertainty. The Fed will have to wait through what he calls this bumpy patch. And it's not realistic for the Fed to know the path for rates, fiscal policy, or tariffs for the rest of the year, right now at least. One-time tariffs, not followed by retaliation that don't spread out, are more likely to be transitory. So that means it's going to take time, Sarah, for them to figure this all out. But he does think that 12 to 18 months from now, rates are going to be lower. Sarah?
Okay, I'm glad you started with Waller and the balance sheet because I've been wanting to talk about this and haven't really because there's been bigger stuff. But the Fed made a really important change when they tapered their QT, or basically are not going to shrink the balance sheet as much as they have been doing, right? From 25 billion to 5 billion. Is it clear why they're doing this? I know the debt ceiling was mentioned as a risk, but there was also discussion of money markets. And I wonder then, does it, after debt ceiling, does it go back? And is this a good thing for the bond market and for the economy?
So let me set the stage a little bit. This very wonky thing that people think matters a lot or could matter a lot. Going into the meeting, we thought there might be a pause because of the debt ceiling issue. Everybody who follows this thing closely was surprised that they said, well, when we started thinking about it for the balance sheet, for the debt ceiling issue, we decided, hey, let's bring it down all the way to 5 billion. Now, what's interesting about this is Powell said this is not a monetary policy thing, but the market took it as something of an easing out there, something that could help. Sarah, the people that I'm talking to who know about this stuff do not think this matters all that much right now. They think there's some effect for markets here. A lot has to do with how the new administration runs their Treasury account, but they don't think it's a major development for monetary policy, even though the market took it as somewhat dovish. Perhaps it helps a little bit on the margin, but they do not think the balance sheet was a big factor in interest rates.
It also sort of feeds into the
I think that's also fair. I mean, look, the Fed is realizing we have weakness in the economy. We don't have enough weakness to lower rates, which makes sense. But we do have enough weakness to say we don't need to be as restrictive on monetary policy with quantitative tightening, which is, why they've lowered the pace of, or the speed at which they're engaging in it. And so I think that's a good thing. That's not bad. Although, as Justin says, my marriage is going to be transitory if this market keeps acting up. We need the Fed to cut these damn rates to save marriages and our portfolios. But that's not happening anytime soon. For everyone in the chat who manages the family's finances, whether you're a wife who manages all the money and the husband doesn't really keep up with it, or you're a husband who manages the money and the wife doesn't keep up with it, have you told your significant other what the hell happened in the past 3 weeks? Or are they just living a fantasy life of everything's great, my husband, my wife knows what they're doing. And in reality, you go to the room every day away from them and you look at the portfolio and cry and then come back to where they're sitting and give them a hug and act like nothing happened. Because I feel like that's got to be happening for a decent amount of people. I'm just like, it's better to not tell them. I told them, but I don't say how much we lost. Sanjay says rule number 1 is just tell them. Angel says, I told her and she said buy more. So when it goes back up, we'll be richer. Dude, that's a keeper. That is a keeper. Krishna says my wife has no idea. A bunch of you guys are saying, nope, we did not. Ben says she thinks we're up. My uncle's wife is divorcing him because he didn't tell her how much he lost. Is that a real story or are you trolling? That's crazy, bro. Dude, money is the number 1 cause of divorce in America. It's freaking money. It's not cheating. It's not infidelity. It's literally money, finances. It's the number 1 cause for divorce. I think is the updated stat 50. How much percentage of couples get divorced in the US? It's like 50%, right? It's up there. Yeah, 50%, 48.7%. That's wild, bro. Like, it's wild to just think that there's a coin flip chance that the person you marry, you're going to leave in America. Statistically. That is pretty wild. Yeah, I think sometimes not telling them is fine if they don't understand what's happening. Like, it depends on who your significant other is, right? If there's someone that freaks out when they see stuff like go up and down, then it's better they don't know, right? Because they don't need to deal with that stress. But if there's someone that actually cares about like the portfolio, then honesty is always the best policy and just letting them know, yeah, like we're down $500,000. We were up $500,000 last week. We're down $500,000. But if someone can't handle that, sometimes it's better to just like, all right, you just don't have to look at this. I'll deal with the stress. Elaine says my account went down 3 million and my hubby laughed. He knows it will come back. It was all unrealized anyway. See, that's a healthy relationship. Like it would be. It's a toxic relationship if one of the people in the relationship is actually trying to like create financial freedom, and then the other one is like upset at them because they're losing money. It's like, well, they're at least trying to learn about the markets and get things done. Yeah, maybe they make some stupid mistakes, but like it's the nature of markets. You got to try. And then when things go up and down, it's like if you're going to blame someone because the market is being the market, like that's just not healthy. So I think it's really important that couples know, especially if you're not managing the money, that yeah, this is what happens. It goes up, it goes down, and it is what it is. I got my wife a new boyfriend to keep her distracted. Oh my gosh. That's hilarious, bro. That is so funny. Michelle says, I'm the only one Ray talks to about it. It's all part of the game, but we both invest, him more than me, but I'm trying. Yeah, see, that's healthy. That's healthy. Bara says, my husband is very supportive. He gets excited when the market is down and he encourages me to put in more. See, Bara is like my mom. She wants to buy more. My dad gets upset, but he's been better about buying the dip now. My girl was telling me to sell the top. That's the part that sucks, right? It's like when your girl or your significant other is like, hey, you should sell. And you're like, nope, it's going higher. And it goes straight down. And they just look at you like, look, I don't really know about the stock market, but I knew that Robinhood at 65 was pretty damn high and you probably should have sold. And you just have to sit there and deal with it. Have we talked about the new Hood Gold offering? Yes, it is going to be crypto, 1% crypto. Is anyone actually going to do this here? Does anyone have crypto that you would bring over to Hood? I'm curious how many people actually take advantage of this. The brokerage transfer, it seems more likely than not that people take advantage of. The crypto one, I don't know. Because a lot of people still don't trust crypto on Hood. I mean, I think their fees are the cheapest. I kind of don't care about the whole cold wallets, storage thing that people care about. But the OG crypto folks that do, I don't think they would easily move their crypto to Hood. But you can get 1% now if you do it. I'll ask Derek. Derek has a ton of crypto on Coinbase. Maybe he takes advantage of this. Maybe he takes advantage of 1% and he does this as well. Elaine says, this is why I managed the money. He couldn't handle the day-to-day fluctuations. Yeah, dude, again, it's like we're all so desensitized to it at this point. It's like, it is what it is. It's like, okay, go up, go down. I don't care. I will live with the results. And, I'll live to see another day as the markets want to be, whatever the markets want to be. GameStop's up 4% right here. Lazar's now up 10%. S&P is still red. I mean, it's kind of just, we haven't really developed a trend by any sense. At least we're holding above 560. Again, 549 was the bottom last week. But we're doing all right at these levels. Here's a chart from Europe. So again, by the way, no one said this yet, but Germany unveiled some $1 trillion spending thing today, which should be good for the defense contractors. Yeah, Germany is set to embark on their most ambitious defense spending initiative since World War II. And it's going to be €1 trillion defense and infrastructure splurge, which I think is a bit more than what was rumored over the past couple of weeks. So again, Europe, ironically, benefiting from Trump, because without Trump being this isolationist, Germany would not be spending this much money. And that's why the European defense contractors have been doing very well. Yeah, it probably has been priced in for a while. I mean, that's fair. It's just that headline number today was the highest number that I've seen on Germany. This one right here, Bank of America said, for the past 2 weeks, we saw the biggest foreign selling of U.S. stocks since March of 2023. Global investors are still holding $16 trillion in U.S. equities. Positioning isn't exactly bearish, which means bad news could start hitting harder than good news. AKA, investors are indeed rotating from the U.S., but we still have $16 trillion of U.S. equities that are held by foreign entities. And so it's going to be a really interesting situation of how bad does the dip have to get for foreign money to come back to the United States and say, all right, NVIDIA at $80, $90, like that's just stupid. I'm going to be buying more. Also, we had the money market data yesterday. We lost 21 billion from 7 trillion. Small amount, but it is the most amount of money we've seen on a weekly decrease from money market funds in about 3 weeks. Last week was about $1 billion. This week was about 21 billion. 2 weeks before that, we added 100 billion. So we do have some level of market participants saying, okay, I'm going to take my money out of something safe and maybe transition it into something a little bit more risky. What does this mean for Palantir? Dude, to be honest, Germany and the EU spending this much on defense, I feel like this is a freaking massive tailwind for Palantir. I really do. And quite frankly, maybe that's helping Palantir maintain a little bit of its valuation as well. But I think the biggest thing here is that the money is available now to be spent. Now, can Karp actually get in a room with these German, French officials and get them to believe in him and believe that Palantir is the solution? We're going to find out. But it's not like they don't have the allocation of capital that is ready to be spent. And so I think it's really bullish, to be honest. But it might just not end up playing out until Karp can resolve these relationships. At least right now. Yeah, we're going to see Trump speak at 11. I doubt he'll go exactly live at 11. It might be like 11:15 or something. But he is scheduled to speak. I think Pete Hegseth is also scheduled to speak. And so we do have, I don't know what they're going to be talking about, but they are going to be talking about something. Speaking of Palantir, here's a clip I want to show everybody from the Wendy's interview I did. This guy gave a really, really good, about 2-minute clip on why Palantir is so useful for them. And so for those that didn't see this, here's 2 minutes on Palantir's integration with Wendy's.
The ability to make that as accurate as possible.
Oh, it's. I'll give you an example of last year. We had a phenomenal promotion with. We did a SpongeBob collab, and that collaboration went wild in the first 12 hours. We had people standing out front of our stores in SpongeBob costumes.
Wow.
We had no idea that was going to happen. The first demand signals we got were aggregated by the Palantir software.
Wow.
That software told us, the Foundry software told us, we have a problem. Something is happening that doesn't happen. And people say, well, you should have forecasted it better. No forecasting model that we have in existence would have ever told us that we would have had a parabolic move in demand in a matter of hours across a multitude of items. Our work with Palantir in Foundry gave us that. Had we not had that, we would have probably sat still for 72 hours, 48 hours until we realized what was happening and the extent it was happening.
Right.
We would have known something was happening. We just wouldn't have known how large. And we certainly wouldn't have taken the steps to the scale we needed to fix it.
Correct.
So in the first hours of the promo, I was on the phone with our chief marketing officer saying, hey, what are you seeing? Because I'm getting back into production on the sauce, burgers, buns, everything that went along with the promotion. So it changed our business, because without it, I would tell you that we would have had outages at stores for 5, 6, 7, 8 days. We would have had to have pulled out of the promotion in some markets. Instead, we had small outages scattered across our system of one day, maybe. So that impacted our business last fall, and we're not very far into this journey.
Right. And imagine.
So we can watch a little bit more of that later, but just even that forecast demand projecting tool in AIP, which is only one layer of what they're using Palantir for, it goes to show you how exciting the software is and really how many results they're getting. One of the other things he said in the interview that was important is that they went to other data analytics providers, and those providers told them, hey, your data is not good enough to be integrated into our system. And that left them with a really salty taste in their mouth, pun intended, because essentially they were like, screw you. Like, we have green money. Like, you're telling us that you don't want to use you don't want to work with us because our data is not pristine enough. Whereas Palantir said, we don't care how crappy or how valuable your data is. We're going to build something that's specific. This is where the consulting part comes in for Palantir, towards your enterprise. And that's why Wendy's is able to pay the millions of dollars they're paying, because there's actual value there. And you get a really good integrated ecosystem that works together. And so the fact that they work in collaboration with Wendy's versus like tell them, oh, you can't work with us because your data is not good enough. It's like, what does that even mean? Your data is not good enough. The whole point of a company in big data is to work with any type of data, make it good enough to then get transformational results. And that's the thing they were the most impressed by. Palantir didn't take no for an answer. They just wanted to make sure they could help at any point. A lot of you guys had great comments underneath the video. You were laughing at me looking in front of the camera every 2 minutes. The reason I was doing that is because I had no production team. I had to control the audio and the video. And there's always a bit of paranoia that like the video's not recording, or that the audio's not working, or that it shuts off randomly. So it's like every 2 minutes, I'm just like looking into the camera to like make sure I see the red dot recording. And so that's why like I kept staring into the camera. You guys were hilarious in the comments. You're like, why does this guy stare into my soul every 2 minutes? I'm like, I'm just trying to make sure the camera's working because I don't have a producer here. So I needed it to work. But yeah, thankfully all the interviews came out. Okay, so here's an update on the Robinhood contracts right here. This is from a great account. For anyone that doesn't follow Josh, he was on Robinhood Weekly a couple of weeks ago. And I'm putting his Twitter right here in the chat. Please make sure to follow him if you care about Robinhood at all. But he is taking track of all the volume of contracts that are being traded on the new predictions market product. And so far, 25 million contracts have been traded. $12.6 million have been bet on those contracts, which means Robinhood has done $500,000 of revenue in the first week and a half of them implementing event contracts, which is pretty damn incredible. And futures did 1.2 million in a month. We got those numbers yesterday because they did 2.4 million contracts as well. And this doesn't account for the ladies NCAA bracket or the Fed funds bracket that Robinhood introduced a couple days ago as well, where you can bet on economic events with the Fed rate decision in May. So yes, that's nothing. 500,000 is nothing. I get it. But it's not about the $500,000 of revenue. It's about the rate of growth. I mean, to be able to trade 25 million contracts in a week only on basketball, when they expand this to pretty much everything that's out there that you can bet on in prediction markets, like this is going to be a revenue driver for them that at minimum is doing close to 20 million a year, and or 15 to 20 million. And when you can get something like that off the side, I mean, that pays for all of the matches that they're doing right now, all these 1% matches, like there you go. That's how you pay for that. That's how you finance it. So there's and the margins on these should be incredible because there's should be no cost associated with getting these commissions. It just shows the potential of their TAM to expand is getting pretty aggressive. And that's why they ended up doing this. Scott said, I made a quick $100 last night. Really enjoyed it. Should be a big moneymaker for Hood. Yeah, Jason was posting all of his screenshots of gambling on all these basketball teams. Jason doesn't even watch basketball. So he was just buying a bunch of random contracts last night. Steve is even thinking of opening up a Robinhood account because Steve was watching like 10 different games last night, betting on different parlays and all this stuff. And he was saying, well, maybe I'll open a Robinhood account to start betting even more. So my thing is, if the negative downside effect is people don't like the gambling, I think as long as people are okay with scrolling past that part of the app, which is pretty simple, you just swipe up, the ones that are interested will get into the ecosystem, and then boom, you've got a new cohort of users at this point. I don't think this means short DraftKings. I wouldn't short DraftKings on this. It's just a different vertical that they're entering into. The beautiful thing is that it's legal everywhere because it's an event futures contract. It's not literally gambling as per legal definitions. So somehow Robinhood's skirting the regulators here, and that might allow them to continue to expand this as well. Amit, did you buy any VG? No, I do not have any VG. I just haven't done. If I buy VG, it would be because Chris bought it, to be honest. I haven't really done my own due diligence on this. So kind of just stayed away from this. Same thing with Next Decade. I get the thesis kind of, but I really have not done the due diligence that Chris and Matt have to like form a thesis. So I kind of just, don't care. I'm waiting for NVIDIA to keep falling, bro. Like, let's get NVIDIA back down to like 112, 113 if we really get flushed out, maybe below 110. Other than that, it's not that exciting. Tesla right here at 240, GameStop at 24.48. One thing I was looking at on GameStop last night, I was just randomly scrolling through different options. My average price on grab is 450 to like 455. There are still massive gamblers on GME. Like if you look at the June 20th $100 call, there's 7,000 contracts that are open. If you look at the $125 call on GameStop, there's $64,000 or 64,000 contracts open. Like it's kind of insane, bro. And if you look at the $50 call for April 25th, there's 1,900 contracts open. And I'm just like, even in all of this volatility, even with GameStop basically not really showing any business plan for the future, hundreds of thousands of contracts at prices that are 2 to 3x higher than the current price at $24 are open. And I could just imagine this has to be a option seller's paradise, especially for the market makers that are feeding these drugs to these junkies that are buying $100 calls on GameStop by June. Unless I'm missing something and GameStop is going to go to $100 by June, which means it would outperform everything in the market if it goes up by 400%. But if it doesn't, I mean, like, and the premiums are not even that bad. Like, these are real premiums. I'm just like, there's real juice for people buying this stuff, which to me is just insane at these levels. Okay, I think we have Trump in 12 minutes. Again, it says he's live at 10. Or 11. I don't know if he'll actually be live. He's giving remarks from the Oval Office. Pete Hegseth will be there. Maybe this is on the conference or the award for Lockheed Martin and Boeing. So it looks like it might be a defense-related thing. But we'll see what that ends up being. Yesterday was the Department of Education thing. Again, I don't think the Department of Education is actually going to get banned, but that's what Trump is trying to do. We'll see if that ends up actually happening. Let's get a little update here on FedEx and see what we got from their earnings. And then we'll keep going from there.
Colin's been tracking the action. Frank, how much of this is a macro story that's hurting FedEx?
Well, that's really the question. Is it a macro story? Is it a FedEx problem? A lot of signs are pointing to it's a macro situation. So let's get to what you were just talking about. The flurry of price target cuts is in response to FedEx missing on EPS and cutting revenue and EPS guidance for the current quarter. But also the fact that lower outlook does not include the potential impact of tariffs that began on April the 2nd and just that potential disruption. So if you take a look here, you're going to see a range in price target cuts. Citi, kind of a minor one, from $317 down to $305. Cowen, a much deeper slash from $377 down to $310. FedEx making the case for cuts themselves really on the call, citing a challenging environment overall and specifically weakness in the U.S. industrial economy that really impacted the freight division. But you may notice in many cases, the stock's holding on to a buy or an overweight rating. Loop Capital, really a notable exception there. Analysts from Loop moving FedEx to a sell due to recession concerns. They say in part, FedEx is a really bad recession stock because thin express margins amplify the earnings hit whenever there's pressure on the top line. It's not one you want to go with if things go south. However,
all right, so this is more macro related on FedEx. Also, their guidance obviously getting hit. We also have Ross on CNBC right now. Let's go to him and see what he has to say about Tesla.
Thanks to Musk's neglect, Tesla is at high risk. Joining us now to discuss, Gerber Kawasaki CEO Ross Gerber. Ross, I mean, Musk comes and does the town hall. At least it's a gesture that he's paying some kind of attention. What are your concerns in terms of his leadership here, that he's not doing enough with the business, or just that because he's such a lightning rod, it's hurting the brand, or all of it?
Well, I think just even from that clip, you can see his complete disassociation from his actions and what's actually happening at Tesla, and his desire to blame people for actually speaking out against him because they so vehemently disagree with not only his behavior, but the things he says and does, but also his actions within the government as well. So not only is he not working at Tesla, he's personally damaging the brand on a daily basis. And he's put, a lot of people have just sold their Teslas, and he's put a lot of Tesla owners like me who want to continue to drive. I want to drive my Cybertruck with pride. And instead, it's like I'm worried that somebody's going to vandalize my car. And this is a reality that all Tesla owners face because of Elon's actions and Elon alone.
But if he were not the CEO of the company, he still owns whatever 15% of the shares. He's still going to have the closest association with it. I just wonder if you have to kind of weather the brand backlash storm, however it settles out, or just sell the stock. I mean, the stock's been dead money for 4 years anyway. And, I just looked at it. It's like trading at the 1,000-day moving average. So that anyone who bought it in the last 1,000 days on average is just barely broken even.
Yeah, that's true. And actually, it was 5 years ago to the day that the great Tesla run began, which lasted about 18 months and peaked in November 2001 when he started selling Tesla stock to buy Twitter. So it started with the purchase of Twitter, and it's just gone worse and worse and worse to now literally, working at the government and working with Donald Trump and having Trump and Ludnick pitching Tesla stock and cars. I mean, that's how bad it is. How about just running traditional ads and separating yourself from the brand? He has CEOs who run his other companies. I don't understand why he won't let Tesla have a dedicated CEO, but there's crisis communications teams, there's marketing teams that can come in here and really work to repair the brand, because climate change is the biggest issues humans face in our future. I just survived the Palisades fire. I can tell you firsthand, we will all be affected by climate change, and Tesla is one of the most impactful companies in solving this, and it needs to succeed. And that's why I'm here, and that's why I'm saying what I'm saying, because I want what's best for Tesla.
Before we go back to that, Trump tweeted this last night. I look forward to watching the sick terrorist thugs get 20-year jail sentences for what they're doing to Elon Musk and Tesla. Perhaps they could serve them in the prisons of El Salvador, which have become so recently famous for such lovely conditions. So Trump doubling down on this idea that if you continue to vandalize Teslas, you're going to get a pretty hefty jail sentence.
Ross, do you disagree with him politically? I mean, is that part of the problem here?
My political views aren't relevant to this discussion, and my political views are in the middle. So for me, it's not about politics. It's about selling EVs. We are selling less EVs. We have the best products on the market, and we're selling less of them while the market's growing fast. Why is everybody still in denial on why this is happening and what the solutions are to solving it?
I guess I'm asking because, Ron Barron has been on CNBC in recent weeks, and he said he's not selling any. And even though he hopes he would be less visible, he still feels like he's best positioned and more fired up than ever to make Tesla a success. There have been questions about Musk's distraction, multiple jobs. I mean, this is nothing new. This has been for years. So I guess I'm wondering now, is the big problem the political views and sort of what that's been doing to the brand and these fires at the dealerships, or is it the distraction?
Well, I think the destruction of the brand is more than distraction of the political issues in the sense of, you know, we have to sell cars ultimately to make money. I know the AI story is wonderful and robotics is a hope for them. But, you know, I live in LA, and yesterday in horrible traffic, Waymos were working fine, and I had to disengage my full self-driving over and over and over again. So this fantasy that their software actually works to the level of its competitors is also an issue. I drive a Cybertruck. Now I got to take it in for another recall. This is an incomplete product. And I actually love my Cybertruck, and I could sell Cybertrucks left and right if they actually had ads and fixed a few of the flaws. But, you know, this was an incomplete product, and there's problem after problem with it. And I think it's emblematic of the problems of having a distracted CEO on top of the marketing issues he's created.
But Ross, if this were a car, if this were like reduced to let's run the EV business as well as we can, and let's try to hit some profit targets and all the rest, this is not even $100 stock. If this is just a car company,
I'm talking about solving full self-driving. I'm not talking. I agree what you're saying. If it was just an EV,
my point is Musk's role as CEO has been instrumental in, for whatever reason, getting investors to give him credit in the market cap for all this stuff that hasn't happened yet. Can anybody else get in that role and do the same thing?
Well, I'm not saying that Musk shouldn't be involved with Tesla. I'm talking about running Tesla day to day. And my idea is having JB Straubel come back. You know, this is a guy who runs a company. Redwood is a great company. Tesla could acquire it. He's already on the board of Tesla. He's friends with Elon. Elon should be able to trust him to run Tesla while he's running the government. And if Elon wants to run the government, that's fine. But like, somebody should be focused on it. And then the brand and the company can work to separate itself from the politics. And politics doesn't sell in this day and age. It doesn't matter what business you're in. People and consumers don't want to be involved with politics, and they want to feel good about the things that they're buying. And so the brand needs to refocus itself on its core mission, which is climate change. It's not robotics. I'm sorry. And it's going to be a long, long time till there's robots walking around your house. A long, long time. So we got to sell cars in the meantime.
But that's part of the bull story, is that they are transforming into more robotics and self-driving technology company. And for that, I don't know, is the brand power as important if they're a first mover?
So you think people are going to put an Elon Musk like robot in their house right now when they're attacking Teslas? No, I mean,
Kim Kardashian is.
Well, there you go. You got one. So, you know, maybe you can find some other people shelling out 30 grand for an Elon Musk robot. But if you actually poll consumers, you're going to get zero or one out of 100. So, you know,
Ross, assuming he doesn't say thanks, Ross, I'm going to step down. You're going to sell the stock. I mean, first of all, it's interesting. He's telling employees to hold the stock. His directors continue to sell, some of them under $300.
Yeah, well, you know, I'm in a pickle because we still own a lot of Tesla stock, so we're down on it now, and we've been sellers for years now, you know, because as you've been saying, it's been kind of dead money for years, and we just accumulated so much in the early days, well more than it was 10 years ago. So we're still in that process of selling stock. It's still a major position at my firm, you know, and we have many clients that love Tesla and want to hold their stock, and I own the stock. You know, to be honest, I own the stock. I love the company. I'm here because I love Tesla, and I want to see people feel great about the company and love the brand. And we've gone from a point of pride where people were like loving Tesla and it was a premium brand to now we're like getting attacked and the brand value is worse than Toyota. So,
but a lot of people who love Tesla, like you investors, love Elon Musk. They were always intertwined. And I do wonder what would happen if your wish comes true that he steps down as CEO to Tesla stock.
It just depends who they replace him with. Because once again, if you look at his history with Gwen and with Linda, who are great executives, like I don't see the negative of saying, hey, I'm going to put a great executive here because I work at the government, but I am not changing my role at Tesla. How is that a negative for the stock?
Well, that's Gerber. Dude, Gerber has always been interesting when it comes to Tesla. He's also been interesting with Palantir. I mean, if you guys don't remember, he literally called Alex Carr horrible names years ago, said Palantir was equivalent to Nazi Germany. I mean, like just crazy shit. And so, you know, Gerber's been one to use his political biases, I think, to inform his opinions on Elon in particular. He was not a fan of Elon buying Twitter. He is absolutely not a fan of Trump, so he does not like Elon with Trump. Some of his core arguments about Tesla, it's the same critique that everyone has, right? Which is that, hey, they got to get back to selling cars. Elon's got to get focused, yada, yada. I just think his unique angle at which he tends to attack Elon from is a bit more biased because of his politics. But obviously his core fundamental critique about Tesla is the same critique that someone like even Dan Ives had yesterday as well. Now, his fund GK has not necessarily done the best over the past 5 years. And a lot of that, I mean, doesn't really have to do with Tesla. It has to do with other stuff. So year to date, that's down 7%. Past 5 years, that's down 20%. So, I mean, look, if you bet on Gerber to make money over the past 5 years and his ETF hasn't really worked out, a lot of this is filled with random names. Tesla's not even the top 10 position anymore. It used to be years ago. Now it's not. But yeah, it's not like he's necessarily outperformed Elon and Tesla, but he's been pissed off about Elon and Tesla for a long time. Now, granted, he got his name, Gerber made his name by buying Tesla back in 2017, 2018. Him and Kathy were like the only real public fund managers buying Tesla. And it did really well for them. And that's always been my critique of Gerber. It's like, dude, there's like zero loyalty or gratitude for someone who has literally given you your name. Like, no one would know who Ross Gerber is unless Tesla went up. That was because of Elon, and that now Gerber's been able to build a brand for himself. But like, there's no gratitude toward that. It's just hate because Elon has gone political, which I get. But it's never necessarily been respect for what Elon's been doing over the past 10 years for Gerber. And that's why I think a lot of people hate when he talks, because it always sounds like he's just whining about Elon. Trump is not live yet. I don't think he'll literally be live at 11, but he should be going live soon. We did get that Reuters headline that I posted on the screen of 1.4 trillion in investments. I don't know how accurate that is. Reuters is reporting it. Someone went to the UAE just now. I forgot. But someone went to the UAE from the Trump administration. Oh, I think it was Vance. And he spoke to them for a bit. And it looks like after that meeting, we're getting some more progress on more investments into the United States. Lutnick also was on the Olin podcast yesterday. There were actually some really good gems from that discussion in terms of what they're thinking of doing. I got a deeper appreciation for who Howard Lutnick is. I didn't know much about his personal life. And so I know sometimes on TV, his arguments are kind of off. But in terms of getting to know him as a person and where he comes from, this was definitely a good interview. Here is his take on how eliminating income tax could possibly happen as well.
That's $1 trillion a year. Right. Okay. So I said, I think we're going to cut $1 trillion a year in expense. And then I think we can, through tariffs and other means, we're going to get revenues of $1 trillion. Okay?
Incremental revenue.
Incremental revenue.
Yeah.
And we're going to balance the budget.
But sorry, let me just ask one question. How do the tax cuts or the extension of the tax cuts?
There is zero basis. I mean,
zero basis.
Where I was yesterday and where I am tomorrow, like, oh, it's a tax cut. No, it's not. It's the exact same thing as yesterday is today. To say continuing yesterday tomorrow is like silly.
So let me ask you on tariffs. Having studied it yourself, when there's higher tariffs, people purchase less. Things cost more.
No, we'll talk about tariffs.
Yeah.
Let's just finish. Let's just finish Doge. So I'm in the car with him, right? And I said, we're going to balance the budget. And I said, but I have one favor to ask of you. If we can balance the budget for you, will you agree to waive all income tax for every person who makes less than $150,000 a year for the United States of America, which, by the way, is about 85% of America.
Right.
And the reason you want to work for Donald Trump is he looks at me and goes, sure. Like, you realize the president of the United States said, if you balance the budget, sure. And he's not lying. He's not kidding. He's like, yeah.
Okay, so obviously Trump would want to cut taxes for everyone, but I don't think it's possible, dude. I mean, that's a lot of money they would have to find out to replace. Pounty right here at $88, up about 1%. I wouldn't be upset if they got people making less than 150 to pay no income tax. I mean, that would be incredible. I just don't know if they could actually figure that out. Maybe the ambition is high, and it's good the ambition is high, but To make that a reality, I think that would be a little bit tough. Nvidia right here down 1.5. Tesla still up 2%. S&P 500 down about 0.5%. Robinhood down 0.5%. And Palantir green up about 1% here right now. Yeah, we are getting a little bit of green right now. Every $1 trillion investment is 1% GDP growth. Yes, I agree. The question is the UAE actually investing 1.4 trillion? Maybe that's what Trump's going to be talking about today at the Oval Office. But yeah, that Reuters headline, we got to see if that materializes into real investments. Even with the quad witching today, I mean, the volatility has been kind of kept at a minimal. Nothing crazy is happening up or down. I know we got a bunch of hours left, but so far, no massive level of increase or decrease across stocks. Celsius is up 4%, so that one continues to get momentum. Boeing got the contract. Did they get it? Let's see. Is that baked into the stock already? Nope. Boeing's up 4%. It looks like Boeing got the contract. So now, did Lockheed get a certain part of it, or is it only Boeing? Is Lockheed Martin down? Are they sharing the contract? LMT? Oh, Lockheed's down. There you go. There's the red candle. Yep, it looks like Boeing got it over Lockheed. Trump awards Boeing next generation fighter jet contract worth billions. Wow, there you go. Boeing got it over Lockheed. 179 on Boeing. It was also up 7% 2 days ago on increased free cash flow guidance for Q1. So this is just the cherry on top. Lockheed now down 2%. Boeing up 4%. Okay, so Boeing wins. They beat Lockheed for a pretty big fighter jet contract. And it looks like that's what Trump's going to be talking about once they go live as well. Okay, here's a little bit more on the tariff stuff from Lutnick right here. And then we'll be waiting for when Trump officially goes live. Wow, Boeing got it. I thought they were going to split it with Lockheed, to be honest, but looks like Boeing got it. This market has to kill all puts and calls, so flat to slightly up today. Yeah, that also could be one of the reasons we're not getting that much volatility. All right, so here's Lutnick, a little bit more on tariffs, and then we'll get to Trump in a bit.
And then the context of tariffs and maybe historically and what role they played now.
So I remind people that on the earth, there was the Dark Ages. So the Dark Ages meant that the world knew how to read. And then because of religious and other actions, they burned all the books.
Yeah. Right.
And literally, the earth stopped learning how to read for 500 years or 400 years. We didn't know how to read. And we knew how to read before. So how could you forget? So America was built on tariffs with no income tax. No income tax till 1913. None. Greatest, richest country in the world. So when Donald Trump says, make America great again, what he's talking about is from 1880 to 1913, when the country had so much money that we had blue ribbon commissions, which you guys would have been on, right? To try to figure out how to spend the money, right? And no income tax. Then we put in the income tax in 1913. Why? Because we're entering World War I.
Yeah.
And don't we all need to contribute to protect democracy and to protect our way of life, right? Then what happens is the world goes into chaos. We come out of chaos, right? And then we're starting to think of, well, what do we do? What do we do? And then 1929, the stock market crashes, right? 1933, we start to say, oh, God, we forgot. We need to do tariffs. 1933, how can you do tariffs when the markets crash, the world's going into depression, and you're going to do tariffs in 1933? You can't charge the rest of the world money unless the rest of the world's okay.
That's right.
So it was too little, too late, right? So then we come out of World War II. It's 1945. We need to rebuild the world. Okay, so we decide we're going to take our tariffs down. And we'll let them, here's the key, we'll let them have tariffs be up. And we will export the power of our economy to let them rebuild. And we'll let them rebuild. And that's what happened. So 1945, we have the Marshall Plan, right? And we do it in Japan, of course, because they need to be rebuilt. What's the difference, right? So they need to be rebuilt. And then what happens? We have the 50s and we have the Korean War. So we let them rebuild, which means low tariffs here, high tariffs there. Low tariffs here, high tariffs there. Then we have the Vietnam War.
Are you guys buying this this historical lesson on tariffs?
Right? So now all of a sudden we have all of Southeast Asia. Low tariffs here, high tariffs there. You know what the best example I can give you to make it crystal clear? Kuwait. We spend almost $100 billion freeing Kuwait, right? You know who has the highest tariffs against the United States of America? The number one country with the highest tariffs against the United States of America. Kuwait. And you think, what? That's insane. But here's what it is. If you go back to this understanding the way America thinks, you need to be rebuilt. You were just destroyed, right? All their oils were, you remember Red, the guy's name was Red something, and he was the guy who capped there were fires in all the oil wells, and he capped them all, and it was amazing. So we let them put up high tariffs. But you know what the problem is? Then we forget.
Right.
And we let it go.
Yeah.
So Donald Trump comes in and says, it's got to stop.
Okay, so that's an incredible context now for tariffs. It's like, it was a long-term strategy that essentially says, okay, great. There's rebuilding to be done, sort of almost out of the largesse of America. We're going to enable that to happen. So we'll lower tariffs here and we'll support the high tariff regimes over there.
We let it happen.
We let it happen.
On purpose.
But it's an incredible thing you're also saying, though, which is that it's inexorably linked to this repetitive machinery of war, because those create these boundary conditions over and over again.
Always.
Where there's so much destruction abroad that America then feels compelled to have to do this.
Correct.
And
That's
so-
exactly right. So what happens is, and then you say to yourself, okay, I get the 40s, I get the 50s, I get the 70s, right? But 80s, 90s, 2000, 2010, what? It's time out. 20. So Donald Trump gets elected 2016. Who understands this? Okay, let me give you a hint. Donald J. Trump. Who else? Nobody.
Yeah.
Right? You'd say, wow, he understands. And how long has he been talking about it? 40 years.
Yeah.
Why? Because in the 80s, he's saying, what are you doing?
Well, let me give you the economist's counter, and then you can respond to it, which is tariffs on imports in the United States will ultimately pass to the consumer. Higher prices, inflationary. So the things that our consumers, that our citizens are buying gets more expensive. And as a result, they buy less. And it's recessionary. It shrinks the economy. It shrinks spending. It shrinks consumption. Can you kind of respond to that's the typical economist refrain on this, independent, and maybe they're isolating the imbalance.
Okay. India has a 50% tariff on average. 50. We have on average 4. Okay? I would say to the person who said that, can I ask you a question? What are you talking about? They're 50 and 4. Well, here's what you're talking about. When we're all equal and everything is free and fair, if you raise tariffs and they raise tariffs, isn't it bad for society? The answer is, of course it is. But there's 2 differences. Number one, let's do human beings first. Before we go to the math, let's go to human beings. Once upon a time, we had an auto industry in Detroit, okay, and in Ohio, but Detroit. Then some genius named Bill Clinton signs the North American Free Trade Agreement, or corporations, you can screw Americans and go get cheap labor in Mexico and break the unions by going to Canada. Now, if you were General Motors, I'd say it's like my birthday.
Yeah.
But if you're a worker who comes from Michigan or Ohio, they just signed, you know what they signed? Worst statistic I'm going to tell you today. Average life expectancy of high school educated workforce. So, by the way, the United States of America, 2/3 is high school educated, 1/3 is college educated. The difference today of average life expectancy between those two categories is 7 years.
Okay. I don't think he's answered any of the questions that this is similar to when he was on CNBC a couple of weeks ago and they asked him, hey, won't things get more expensive if you import or if you create here, given cost of goods go down or cost of goods go up, particularly labor? There's not a response, right? I think also the historical stuff he's talking about here, I don't really get it because 1913 was a different time. I appreciate some of the context of like, hey, this is how tariffs started. This is how we got into it. But it's a totally different world. Like it's a semi-globalized and at the same time rapidly deglobalized world. And the idea that we can go back to the times of 1913 or 1935 when we try to conceptualize how we pay for the deficit right now, and then immediately go to something that worked hundreds of years ago that probably is not going to work in the same way, given how things have changed after 100 years. It's just not that convincing, right? Even with the historical context on how we set up tariffs. So I don't know. I think the simple question is, will things get more expensive if we put on tariffs? And I think the answer is yes. That's why Jay Powell and all these Fed presidents continuously speak about this idea of tariff inflation being transitory, because they're hoping that it's a one-time thing and then eventually that inflation leaves the system. But they're not denying that there won't be inflation like there was in 2018 when we had to raise rates to deal with the trade war. And then in 2019, we finally started cutting. And that's why 2019 was a good year. 2018 was a crappy year. If we really end up going head to head on April 2nd, I don't think any of this historical context that Lutnick's giving is really going to help. Trump is not live yet. Probably very soon, but it's not officially live. I think he's just going to be talking about this Boeing contract. I don't think there's going to be anything that different that he speaks about. But if he takes questions, then there might be other stuff that they talk about as well. Robinhood right here, 43.17. Next decade, 881. Boeing 180.72. Again, up 5% off that contract. Wow, Lockheed Martin really getting hit now. 5% down, 5.38% getting hit. 5.38% getting hit. He never said tariffs are good. He's implying that if you impose tariffs on us, we will impose tariffs on you. We want all tariffs removed. Look, that I get it. And I understand why people are saying that's why we're having a trade war that's not really started by the US, it's been started by other countries. It's just a question of if they don't take off the tariffs and we engage with the tariffs, we're in a full-on trade war. And I don't know what the outcome of that is to be positive, right? And also it's not just about wanting tariffs to be removed. The administration wants manufacturing in the United States, which is the impetus for new tariffs, right? They want Honda to make their stuff not in Japan, but in the United States. The fundamental question that I still haven't gotten an answer to is, won't that make Honda cars more expensive? And regardless of taking away Japanese tariffs and taking away our tariffs, and now we're net neutral on tariffs, the cost of goods go up in the United States unless you have such massive economies of scale that you could get the unit cost to go down per car that you create, which is what they've been able to do abroad, but not in the United States. So that's the question Friedberg asked. That's the question that Sarah Eisen asked. And the answer we got from Lutnick last time was robots, which wasn't the most convincing to me. But I agree. Look, I'm not even against what Trump's doing when it comes to tariffs, because in some respects, the EU, India, they are charging ridiculous tariffs, and we should reciprocate those tariffs in order to get them to take off their tariffs. I think that's smart. Hopefully it doesn't get to an extent where it's a full-on war April 2nd. But the overall argument of country like Apple building the iPhone in the United States, either Apple's going to have worse margins or the consumer's going to have to pay way more per iPhone if they don't get Chinese labor costs. And either way, that seems bad for the American economy, either in terms of shareholders or in terms of the price of goods themselves. So I think we're going to have to figure out eventually how this fully plays out. Yeah, moving factories takes more than 4 years. That's another thing, right? This is why I think sometimes people feel it's a pipe dream when Lutnick talks about this stuff, because idealistically, it would be amazing for Toyota to build all their cars in the United States. But it's not happening overnight. And if it does happen, how much more expensive does that become for the consumer? I think that's the question that people want to get answered. Now, American labor is better than our jobs being shipped overseas, but it comes with the nuance of American labor has American minimum wage laws, right? Like benefits, healthcare, 401k, all this stuff. You don't necessarily get the same in Chinese factories. And that leads to the cheap goods that we have in the States right now. Is Tesla still green? Is Tesla still green? Tesla is 240.9. Tesla's still green. April 2nd is the day that tariffs, reciprocal tariffs, and new tariffs officially go into effect. I'm of the belief that they won't exactly go into effect the way that Trump's been saying they will, but I think the market's kind of on tilt until that happens. Mutual tariffs should help eliminate tariffs, but the manufacturing base is not prepared to respond. It takes about 10 years to rebuild manufacturing in an area. Yeah, and I mean, like, it's good to start the process, but it's probably not going to happen that soon. Again, I think the administration's got something up their sleeve, dude. I keep saying this, but I really don't think April 2nd it's going to be a doomsday scenario. I think there's going to be more green than red in how they play out these tariffs, but in a few weeks, we will find out. Literally, it's going to be April in 10 days, bro. That's insane. We're going to be on the 4th month of the year. Like, I really feel 2025 is moving so quick. Palantir going a little bit red right now. But it does feel like this year is completely flown by. They need to bring manufacturing back, more expensive, but to go to war. Sham's argument, you need tons to be able to build in wartime. Yeah, and see, again, if we're reindustrializing the American base of manufacturing, that's where Palantir's Warp Speed product, which I interviewed someone last night as well on Warp Speed, that should really matter if we're bringing back all this American manufacturing. The question is to what extent, but I feel like Warp Speed, that's a pretty strong tailwind. And that should be like cared about from a software perspective, because you can't just manufacture in the United States without having a software advantage manufacturing happen. And I think that's been Shyam Sankar's whole point about Warp Speed as well. Here is what UBS is saying about the markets and why they're saying it might be time to buy a little bit of the dip.
From tariffs on lumber to sticky high mortgage rates, it's been a tough time for the home builder stocks lately and sentiment. But that said, our next guest believes it's time to buy the group. John Lovallo, the UBS home builders analyst, joins us here at Post 9. Welcome, John.
Thanks, Sarah.
So Diana Olick, who covers this, was just reminding us how dour sentiment is right now on home building stocks after Lennar's earnings, for instance. Nobody on Fast Money wanted to buy it, even though mortgage rates have come down. Why?
It's a good question, Sarah. Look, I would tell you that in my time covering the group, sentiment is about as bad as I've seen it from an investor standpoint. There's a lot of things out there to worry about, right? There's tariffs, there's immigration policy, there's DOGE layoffs, and there's sticky interest rates that remain elevated. Our view is that a lot of this is already reflected in the stocks, and our channel checks would suggest that the spring selling season is actually going okay. Now, there are some nuances with Lennar we can talk about, but overall, demand is still there, and getting product at the right price points out into the market is key, and that's what some of these builders are really trying to do.
Is the drop in mortgage rates bringing in buyers?
The drop in mortgage rates, interestingly, from a public home builder standpoint, they're buying down rates to 5 or 5.5% already, right? So what it allows them to do is
the Trump stream is up. It's not live, but it should be live in, looks like, a couple minutes.
Take a little bit of margin. So they can kind of smooth out the fluctuations in rates with these buy down programs.
We saw pretty decent existing home numbers yesterday relative to expectations. Yeah. Inventories are up a little bit, definitely not to sort of long-term normal levels. How does that play into the case for the home builders themselves? They had this advantage from buying down mortgages and obviously lack of supply elsewhere.
That's a good question, Mike. Look, we would take lower interest rates all day long, even if it brings some supply back to the market. The existing home market is dysfunctional. I mean, even with the above kind of consensus print, we're running at 4.3 million units. That's a million units below where it should be. And so to the extent that there's turnover, that's good for both the existing home market and the new home market.
And how are these stocks valued now? I was just looking at the overall group, and I don't know, maybe they're kind of middle of their 10-year range in terms of price to book. I'm sure there are exceptions, but how does it screen out at this point in terms of bad news being priced in?
That's a good question. I mean, we tend to look at them on a PE basis, and I'll tell you why. On a PE basis, they're trading at about 7 times earnings. We would say a normal run rate is between 11 and 12 through a cycle, and you can make an argument why they should be valued higher. On a price to book, to your point, it gets a little tricky looking historically because they own land differently. They also are buying back a lot of stock, so that kind of skews things versus history.
So on Lennar, what was the problem? Average selling prices were down 1%, still above 400,000. Is that what was a concern? Price is strong?
The real investor concern was on the gross margin. Now, Lennar is in a situation where they spun off their land portfolio to Millrose, and they're taking down land on a very consistent basis by contract. They are incentivized to push volume. The other builders can kind of take a step back in markets where things are slower and say, hey, look, we're going to take a little bit more margin here and not push pace quite as hard.
So which one do you like best?
Our top pick in the group is Meritage Homes, which is kind of a small entry-level builder. Not small, but small relative to a Lennar or a D.R. Horton. D.R. Horton is another one that we've always liked.
You know, Tom Lee also is bullish on the home builders. And what's the home builders ETF? I forgot the ticker for it. Lennar right here down about 3%. The home builders is one I've wanted to look at this year as well. There's a lot of nuances to supply, demand, and mortgage rates that make them work. Is it XHB? I think that's what it is. XHB. Yeah, that's it. XHB. So that one's down 2% on the day. For the year. XHB. Yeah, down 7%. If you want exposure to the home builders, XHB would be one of the safer places to get through. But again, it comes down to, can we get bond yields to come down? And also, can there be enough supply to deal with the demand that even Chris talked about when he was trying to get his house in Georgia? Like, it seems like people have money and they're willing to pay a little bit more than not. By the way, Elon just got to the Pentagon. Looks like he's going to be there today. Maybe he's going to be in this White House Oval Office meeting that they're about to have. There he is right there. I wonder where he was. So was he in California yesterday in the Tesla All Hands? That means overnight he came to DC, back to his offices with Doge. And now he's here at the Pentagon. Dude, it's so wild, bro. Like, from Tesla to DC, like, he's really just doing it. He just doesn't care. He is living the life of being this guy. Pentagon will be the next Tesla showroom. Dude, he does have a plane. He does have a private plane. Again, I don't think I would ever get a private jet, but I mean, if I can afford first class, I am tired of sitting in the back of the plane, bro. I don't like, it's a more than 2-hour flight. That first class looks real juicy. Looks real juicy to be able to just sit in first class. Stretch out your legs. Dude, a private jet, when you think about it, it's kind of wild, bro. Like, literally a plane just for you alone in the sky. It's kind of crazy. Amit, what do you think about the gold event next week? I think it'll be good. I don't know if it'll have that much of an impact on Robinhood stock because, again, stock is contingent on crypto, the markets, etc. But I think the fundamentals of the business, which is what I care about as a long-term investor on Hood, I think they're going to introduce a ton of products and it's going to get people excited. So let's see. I mean, Vlad's been crushing it. Let's see if they can keep pushing the product innovation. If they can, then this continues to be an exciting name to look at. Amit, you're 5'6". Why do you need leg space again? Okay, first of all, it's 5'7". All right. That extra inch really does matter at these levels. And it is 5'7". So it's 5'8" with boots on. Second of all, sometimes you still want to stretch out your legs on a long flight, especially if it's like 6 hours from New York to California. So, yo, who's 5'7" or under in the chat? Who's with me? We're not short. We're just not tall. It's a difference. That's it. Amit, I thought you were 6'1". Dude, I hate when people say this because, like, every time I'm just like, No, if I was 6 feet, I would take over planet Earth. If I was 6 feet tall, if I actually had 6 feet, like I would, I don't know, dude. I really feel like I would take over the planet. I really do. There's just something about not being tall that sucks, bro. Like it really sucks. You could have a big personality, all that stuff, which, you know, I would say I have a big personality, but like when you don't have the height, when you're not 6 feet, it's just like it's a big personality and a small person. And then you're just like, you know, it's like it sucks. Now I'm not as short as Kevin Hart, who's like 5'2", but still. If I had got those extra inches, oh my God, dude. It'd been amazing. Sean's 5'6", Eric's 5'9". Trump is not live yet. A bunch of you guys are 6'3". Oh, dude, I'm not 5'5". I promise you, I'm not 5'5". Because I've had friends who are 5'5" and under, 5'4". I'm not there. Like, thank goodness I got the extra 2 inches from 5'5" to 5'7". There is a massive difference between 5'4" and 5'7". Like, gigantic difference. And I still, you know, I like to be taller than the girl. I mean, like, that's just like I don't care how traditional it sounds. Like, I'm not dating a girl who's 6 feet, bro. Like, that's just not happening. I'm not doing it. There's no way. I'm not doing it. I'm not dating a girl who's like 5'10", 5'9". Like, no, bro. Like, I don't care. I don't care. It's just weird. I don't have anything against anyone who does it. I personally don't want to do it. So those extra 2 inches really helps. From 5'6", because most girls are 5'4" and under. So, okay, I think Trump's about to go live. Hold on. Did you guys hear that beeping sound? That was from their live stream. Okay, let's see. Okay, he's not live yet, but he should. Yeah, that was from the live stream. He's not literally live yet, but he should be live in like a minute. But yeah, dude, 5'7" to 5'4", that matters. It really does matter. 6 feet, dude. 6 freaking feet. I wish. Also, I tried playing basketball, and being 6 feet would have helped when playing basketball as well. I told you guys a story, right? Of my coach. I had a really good practice one day, and he came up to me and he was like, "How tall are your parents?" And I told him like 5'5", 5'6", and he was just like, "Damn it," because he was like, "I see potential in you, but you're not going to get taller." All right, Trump's live. Trump's live. Let me pull up this real quick. Here we go. All right, here we go.
Okay, thank you very much. It's a great honor to be with you. I just want to start by saying we had a meeting yesterday on the Department of Education, which is being moved. We're going to educate the children in their states where they can get a proper by almost everybody, including a lot of Democrats, actually. I do want to say that I've decided that the SBA, the Small Business Administration, headed by Kelly Loeffler, is a terrific person, will handle all of the student loan portfolio. We have a portfolio that's very large, lots of loans, tens of thousands of loans, pretty complicated deal. And that's coming out of the Department of Education immediately, and it's going to be headed up by Kelly Loeffler at SBA, and they're all set for it. They're waiting for it. It'll be serviced much better than it has in the past. It's been a mess. And also Bobby Kennedy, the Health and Human Boards, and the governors and the states, and it's going to be a great situation. I guarantee that in a few years from now, I hope I'm going to be around to see it, but I think we're going to see a lot of it. I think that you're going to have tremendous results. You're going to have results like Norway, Sweden, Denmark, a lot of the countries that do so well. I think you're going to have a lot of those results. If you look at Iowa and Indiana and Idaho, so many places that run so well, Florida, Texas, big ones, you're going to have great education, much better than it is now at half the cost. And we're not even doing it as a cost item, although you will save probably half, maybe more than that. And you're not going to be at the bottom of the list. You're going to be much higher. And maybe you'll be, I will guarantee some of the states will be at the top of the list. They'll be comparable or better than these number 1, 2, 3, 4, 5 the countries that are in the top 5 positions. So that's to me, it's very exciting, and it's been received very well. So I just wanted to tell you about the student loans and special needs. But we're here for a reason today that is very exciting, and I'm thrilled to announce that at my direction, the United States Air Force is moving forward with the world's first 6th generation fighter jet, number 6, 6th generation. Nothing in the world comes even close to it. And it'll be known as the F-47. The generals picked a title, and it's a beautiful number, F-47. It's something the likes of which nobody has seen before in terms of all of the attributes of a fighter jet. There's never been anything even close to it, from speed to maneuverability to what it can have to payload. And this has been in the works for a long period of time. After a rigorous and thorough competition between some of America's top aerospace companies, the Air Force is going to be awarding the contract for the next generation air dominance platform to Boeing. As you know, it was highly competed for. There was a lot of competition, generals, and it's been going on for a long time. Very, very tough competition, but this plane is produced numbers that nobody's ever seen before. The F-47 will be the most advanced, most capable, most lethal aircraft ever built. An experimental version of the plane has secretly been flying for almost 5 years, and we're confident that it massively overpowers the capabilities of any other nation. There's no other nation. We know every other plane. I've seen every one of them, and it's not even close. This is a next level. You know, level 5 is good. This is level 6, they say. The F-47 is equipped with state-of-the-art stealth technology. It's virtually unseeable and unprecedented power. It's got the most power of any jet of its kind ever made. Maneuverability, likewise, is there's never been anything like it, despite the power and speed. Its speed is top. So over 2, which is something that you don't hear very often. America's enemies will never see it coming. Hopefully we won't have to use it for that purpose, but you have to have it. And if it ever happens, they won't know what the hell hit them. A new fleet of these magnificent planes will be built in the air during my administration over the next couple of years. It's ready to go. They've already built much of what has to be built in terms of production, including the sheds. We'll ensure that the USA continues to dominate the skies. We've given an order for a lot. We can't tell you the price because it would give way to some of the technology and some of the size of the plane, good sized plane. This contract also represents a historic investment in our defense industrial base, helping to keep America at the cutting edge of aerospace and technology. Our allies are calling constantly. They want to buy them also, and certain allies will be selling them, perhaps toned down versions. We like to tone them down about 10%, which probably makes sense because someday maybe they're not our allies, right? But I would like to ask Secretary Hegseth, who's doing a fantastic job. He's really been very inspiring in so many ways. And I must say that before he speaks, we have had record people wanting to join our military in the last 2.5 months, literally since this, I think probably since the election, November 5th, but especially since we came to office and since I announced Pete. He's young, he's smart, he's strong, he loves it, and they love him. But we've had record numbers of people wanting to join our military. Now, if you go back 6 months, it was the exact opposite. You had record numbers of people not wanting to join the military. Now you have record numbers of people wanting to be in our military. And that's a great honor. That shows you we're really on the right track. So, Pete, maybe say a few words.
Sure. Well, Mr. President, this is a big day. This is a big day for our warfighters. This is a big day for our country, a big day in the world. The name of this program is the Next Generation of Air Dominance. And Mr. President, because of your leadership, your clarity, America is going to have generations in the future of air dominance because of this 6th generation fighter. We've had the F-15, we have had the F-16, the F-18, the F-22, the F-35. Now we have the F-47, which sends a very direct, clear message to our allies that we're not going anywhere, and to our enemies that we will be able to project power around the globe unimpeded for generations to come. Mr. President, this is a gift to my kids and your kids, to my grandkids and your grandkids. This is a historic investment in the American military, in the American industrial base, in American industry that will help revive the warrior ethos inside our military, which we're doing, rebuild our military, which the previous administration did not do, by the way, Mr. President. They paused this program and were prepared to potentially scrap it. We know this is cheaper, longer range, and more stealthy. President Trump said we're reviving it and we're doing it. And then we are also going to reestablish deterrence. Under the previous administration, we looked like fools. Not anymore. President Trump has reestablished American leadership. The F-47 is part of it. And Mr. President, thank you for having the courage to do it and leading the way for all our warfighters.
Thank you very much, Pete. One of the things I will say, but the generals are going to speak in just a couple of seconds, but this plane flies with drones. It flies with many, many drones, as many as you want. And it's a technology that's new, but it doesn't fly by itself. It flies with many drones, as many as we want. And that's something that no other plane can do. So I'd like to introduce, if I might, Air Force Chief of Staff, General David Alvin, and also General Dale White, two incredible people that I've known over the years, but I got to know really well over the last few months. And would you say a few words, please, General?
Thank you very much, Mr. President. Mr. President, Mr. Secretary, thank you so much for your unwavering commitment to our military. I will say that this is a big day. This is a big day for our United States Air Force as well. You know, air dominance is not a birthright, but it's become synonymous with American air power. But air dominance needs to be earned every single day. And since the earliest days of aerial warfare, brave American airmen have jumped into their machines, taken to the air, and they've cleared the skies. And whether that be clearing the skies so we can rain down destruction on our enemies from above, or we can clear the path for the ground forces below. That's been our commitment to the fight, and that's really been our promise to America. And with this F-47 as the crown jewel in the next generation air dominance family of systems, we're going to be able to keep that promise well into the future. I also want to thank everyone from industry and with the government, our engineers who have worked tirelessly on this program to bring it where we are right now today. This shows that American talent, American skill, and American determination are second to none because this platform is second to none. So we believe that this provides more lethality. It provides more capability, more modernized capability in a way that is built to adapt. This, along with our collaborative combat aircraft the President talked about with drones, this is allowing us to look into the future and unlock the magic that is human-machine teaming. And as we do that, we're going to write the next generation of modern aerial warfare with this. This enables us to do this. The manner in which we put this program together puts more control in the hands of the government, so we can update and adapt at the speed of relevance, at the speed of technology, not at the speed of bureaucracy. This is more Air Force. This is more options for the President. We say as our mission in the United States Air Force is to fly, fight, and win air power anytime, anywhere. If you want to go anywhere, you have to have a platform that gets you anywhere. This provides the President options from the very one end, which is a quick response, and then we can get right back into fight and stance without having to deploy troops that are going to take maybe months and cost more lives. We can be back in fight and stance, and maybe we restore that deterrence. All the way to decisive victory as part of a joint force that is the most lethal and capable military ever known in history. That's what we provide now, and this allows us to provide it into the future. It's more deterrence, more capability. It's what peace through strength looks like into the future, Mr. President. And so we're very proud to do that. And all we can say is, on behalf of the United States Air Force, let's deliver.
Thank you very much. Thank you, General. Would you like to say something?
That's right. I'll just double down what the chief said.
He knows what to do.
Generational
He knows
lead.
who the boss
And
is.
that's exactly right. Your superiority is what it's all about, and this is what we'll deliver.
That's great. Thank you very much. Great job. We've worked together long and hard on this, and this was a big secret. In fact, we don't show too much of the plane for that reason. See what we show? You see how beautiful that is, but that's just a very small part of it.
Sure.
I wasn't surprised. I was wondering how much are you going to show if they came in with that. You see a wheel in the front? That's about it. Any questions?
Mr.
President
President,
Trump,
is
80,000 pages of
All right, here we go. Now we'll get some questions.
documents is a lot to sift through. Can you just tell us who killed Kennedy?
Well, I was given the task of releasing that because many presidents have gone through it and they haven't released. And I said, release. We even released Social Security numbers. I didn't want anything deleted. They said, sir, what about Social Security? People long gone, but they're long gone. So I can't imagine. But I said, if you don't delete it, if you do delete it, we have people are going to say, why did you delete it? There's something in there. So we gave Social Security, we gave everything. And the rest is for you to look at, Peter. You're going to see whether or not you see anything. But we've given it. We're doing it with Dr. Martin Luther King, too. They're preparing all of that. They're going to release everything. And whoever else they want. I mean, we have nothing. We really have nothing to hide. We shouldn't have. When a lot of time goes by. But with the Kennedy files in particular, they were going crazy on them. I don't think there's anything that's earth-shattering, but you'll have to make that determination. In those, it's 80,000. It's actually 88,000, and we have some additional things, as you know, come out today. And for that, you can go to the offices and you can see whatever you want to see. Everything is out there, totally open. The additional stuff is available later on today. You go over to the offices and you can have it immediately, and you'll make a determination.
And on something else, these Trende Aragua guys, because of your executive order, they are designated as foreign terrorists.
Well,
if ISIS or Al-Qaeda foreign terrorists were operating here in the United States, cops would probably be shooting first and asking questions later. And so what is the difference between terrorists, between somebody like an ISIS or an Al-Qaeda operative versus a MS-13 or Trende Aragua?
Well, these are people that focus on destroying people in their homes. They're not as international in that sense. They're a group of thugs. They come from Venezuela. They come from the prisons of Venezuela. They're very, very dangerous people, but they didn't look so dangerous when the guards took care of the situation from El Salvador. And I want to thank the president. He's a friend of mine. He's done a great job. But I just can't imagine that the Democrats are taking this issue where they want to have them back. So now they have men playing in women's sports. They have transgender for everyone. They have open borders. They have all of their crazy policies that are, I think, 95-5, not 90-10, okay? And their new policy is, let's bring Trende Aragua back into our country. Let's bring the worst. These are the worst gang members there are. They looked amazingly frail, though. By the way they were handled. It's very amazing. They weren't, when they were in Colorado cutting the fingers off a man because he made a phone call to the police, they seemed a lot tougher then than they did when they were having their head shaved and they were in shackles. They're tough people. They're bad people. We don't want them in our country. We can't let a judge say that he wants him. He didn't run for president. He didn't get much more than 80 million votes. And we just can't let that happen. It'd be so bad for our country. I won on the basis of getting criminals out of our country that were let in. It was called unforced error. They were let in by Biden, incompetently let in, and let in by the millions, actually. 21 million people. I believe it's 21 million. And that's not even including the gotaways, but these are rough people. We want them out of our country. And I won the election based at least partly on that. And that's a big part, yeah?
Mr. President, there's something. I don't know if you saw this. Tim Walz is now saying about Trump supporters, and forgive me, I'm just reading a quote from Tim Walz. I think I could kick most of their ass.
Oh, boy, he'd be in trouble.
Is there any way to know?
Well, he's a loser. I mean, the guy's a loser. He lost an election. He played a part. Usually a vice president doesn't play a part, they say. I think Tim played a part. I think he was so bad that he hurt her, but she hurt herself, and Joe hurt them both. They didn't have a great group, but I would probably put him at the bottom of the group.
Have you heard that Biden wants to get back involved for Democratic politicians, fundraising and campaigning against your policies?
I hope so. I hope so.
Mr. President, there are several families. Mr. President, there are families from some of the people. Aguila Nación is better from Argentina. There are families from some of the people that were on those flights to El Salvador that claim that they're not criminals, they're not members of Agua, of MS-13. What can you tell them, and what guarantees can you give them that everyone in those planes were actual criminals, terrorists, as you said?
Well, I was told that they went through a very strong vetting process, and that that will also be continuing in El Salvador. And if there's anything like that, we would certainly want to find out. But these were a bad group. This was a bad group, and they were in bad areas, and they were with a lot of other people that were absolutely killers, murderers, and people that were really bad with the worst records you've ever seen. And but we will continue that process. Absolutely. We don't want to make that kind of a mistake.
Is the U.S. planning to give up the position of NATO's Supreme Allied Commander? And if so, why?
NATO is something that I saved. NATO was gone until I came along. In fact, the previous Secretary General, very good man. Both of them are good. The current man is fantastic. But both of them have said, if it wasn't for Trump, you wouldn't even have a NATO, because we were paying the cost of almost all of the countries. And now they're paying. I said, we're not going to do this. We're not going to continue. You hurt us on trade. You do bad things on trade. And then on top of it, we're supposed to pay for your military. And because of what I did, hundreds of billions of dollars flowed into NATO by countries that just weren't paying. They were delinquent. They weren't paying their bills. So NATO is solid. They're strong, but they have to treat us fairly.
Are we going to give up the?
Because look, without us, NATO is not the same thing. And I can tell you, I've been having very good discussions, as you know, with President Zelensky and with President Putin. And President Putin will tell you that without the United States, he wouldn't be worried. But he is worried when the United States is involved. And I have to tell you, I've dealt very well with both gentlemen, and we have, I think we have the confines of a deal. I hope we have the confines of a deal. I'm doing it for two reasons. Number one, and by far most importantly, thousands of young people, and they're not American people, they're Russian and they're Ukrainian, are being killed every week, thousands a week. And also the United States has paid, because of Biden, $350 billion on a war that should have never happened. If we had a competent president and this sitting right here, that war would have never happened. It would have absolutely never happened with me. And it didn't happen. For 4 years, it didn't happen.
Mr. President, do you think you have the authority, the power to round up people, deport them, and then you're under no obligation to a court to show the evidence against them?
Well, that's what the law says. And that's what our country needs, because we were, unfortunately, they allowed millions of people to come into our country, totally unvetted, totally unchecked. So you ought to ask, did he have the authority to allow millions of people? Did Biden have the authority to do something that's unthinkable? Have open borders where millions of people poured into our country, totally unvetted and totally unchecked, just as you would say. And many of those people were criminals. Many of them were from jails and prisons and mental institutions and gang members and drug dealers and very dangerous people. Many were murderers. We have 11,088 that we know of murderers they murdered. Of that number, at least half killed more than one person. They're in our country. They're in a location near you. Biden allowed that to happen to our country. And his people that really ran the country. And the person that operated the auto pen, I think we ought to find out who that was, because I guess that was the real president. So when you ask me if we have the authority, did Biden have the authority to allow millions of people to come into our country? Many of these people, hardened criminals at the top of the line who have caused tremendous damage in our country. You see them in New York City fighting with our police. I mean, literally having fist fights in the street with our police. These are tough, hard criminals. Many of them came out of jails, and not just South America, from all over the world. They came out from Africa, from the Congo. They came out from Asia. not just South America, but many from South America. These are hard, tough criminals, and we have to get them out. And a judge sitting behind a bench someplace got a nice appointment. You can't take that away from the people that are responsible. Now, in this case, Marco Rubio has a lot of big decisions to make, and he's a fantastic person, a great man. I think he'll be our best. I think he has a chance to be our best Secretary of State. He's been doing incredibly. He works so hard. He's gone to so many different countries already, and he's got the authority to get bad people out of our country. And you can't stop that with a judge sitting behind a bench that has no idea what goes on, who happens to be a radical left lunatic.
Do you think the judiciary?
You guys today are denying this New York Times report that Elon Musk was going to be shown a 20 to 30 page presentation about a theoretical war plan against China. Why not just show it to Elon?
Because I don't want to show it to anybody. You know, you're talking about a potential war with China. Now, I deal with these people all the time, and I'm dealing with Pete. I'm dealing with these gentlemen on numerous different airplane purchases, and I think they're all going to be great. But I don't want other people anybody seeing potential war with China. We don't want to have a potential war with China, but I can tell you if we did, we're very well equipped to handle it. But I don't want to show that to anybody. But certainly you wouldn't show it to a businessman who is helping us so much. He's a great patriot. He's paying a big price for helping us cut costs, and he's doing a great job. He's finding tremendous waste, fraud, and abuse. But I certainly wouldn't want, Elon has businesses in China, and he would be susceptible perhaps to that. But it was such a fake story. The New York Times is just as fake as CNN and MSDNC. And anybody read that story, people laughed at that story. Who would do such a thing? And the first thing I did is I called Susie and I called Pete. I said, is there any truth to that? And they said, it's ridiculous. No, he's over there to talk about costs. You might want to address that, Pete. But Elon was over there today to address costs. Doge, thing called Doge, which you've heard about. Pete?
That's exactly right, Mr. President. You pointed out it was a fake story. We pointed out it was meant to sort of undermine whatever relationship the Pentagon has with Elon Musk. Elon Musk is a patriot. Elon Musk is an innovator. Elon Musk provides a lot of capabilities our government and our military rely on, and I'm grateful for that. We welcomed him today to the Pentagon to talk about Doge, to talk about efficiencies, to talk about innovations. It was a great informal conversation. The rest of that reporting was fake. There was no war plans. There was no Chinese war plans. There was no secret plans. That's not what we were doing at the Pentagon.
I might add that I think Elon, if they ever wanted to do that, I think Elon wouldn't do it. I think he wouldn't do it. He wouldn't want to put himself in that position. But if you read what's out of the New York Times, it's such a dishonest newspaper. It's such garbage. It's, it used to be called all the news that's fit to print. Well, it's all the news that's not fit to print. They have fake sources, or they don't have sources. I think they make most of it up. But this was a made-up story by the New York Times. I call it the failing. It's a failing newspaper. It's failing. And they shouldn't do that. They really are the enemy of the people.
And something else.
We do need honest journalism in this. We've made such big strides over the last 2 months, but we just need honest journalism, and we don't have it. When you have a CNN, you have to watch these people every once in a while just to see where they're coming from, and it's so dishonest. MSNBC is, I think, probably worse, and they're both doing horribly in the ratings. I think they're going to be turned off. I don't think they're not doing any ratings. You're doing well in the ratings.
Thank you.
I understand that your trade rep is meeting their Chinese counterpart next week.
Yes.
Is there anything that they can do to stop April 2nd or to roll back the tariffs that you put on China already?
Well, we can talk, but basically, I call April 2nd. I would have made it April 1st, but I didn't want to be April Fool's Day because then nobody would believe what I said, and they do believe me. April 2nd is going to be Liberation Day for America. We've been
all right, tariff discussion here.
Ripped off by every country in the world, friend and foe. We've been ripped off on trade. We've been ripped off on military. We protect people and they don't do anything for us. It's just so unfair for years and years. And now some of that money is going to be coming back to us in the form of tariffs. Tens of billions. It's going to be numbers like nobody's ever seen. So NVIDIA announced today, you saw that, hundreds of billions of dollars of investment. The biggest chip maker in the world announced hundreds of billions of dollars of investment, hundreds of billions, not millions, but billions. They're all coming here. Apple just announced $500 billion worth. They're going to build plants here. You know, they built their plants in China. They're going to build them here. And they're starting immediately. We have investment, the likes of which this country has never seen, already announced. And they all want to have news conferences. I don't have enough time to have that many news conferences, but I would say so far at least $4 trillion. $4 trillion is coming in. Car companies, very importantly, a lot of the car companies that were going to build in Mexico or Canada are now building here, because I don't want cars from Canada. I don't want cars from Mexico. They want to do it, it's fine, but I want the car companies to build here, not, you know, they were building in Mexico 3 plants, big plants, really big plants, and they were going to sell the cars right across the border. We wouldn't have the jobs, we wouldn't have the profits, we wouldn't get the taxes, we get nothing. All we get is unemployment and empty factories. Those days are over. So now those 3 places are going to build here, but many more than that. We have a big one. Honda is building, just announced a really big plant in Indiana, great state, smart place to build. And we have many car companies coming here. The steel mills are going to be booming, And many other things, you know, many other things come with that. But we need that for defense. You know, there are certain things you have to have. You have to have steel. We would have had, if I didn't do in my first term, tariffs to stop the onslaught, because they were dumping steel in order to destroy our steel plants. If I didn't do 50% and even 100% in certain cases tariffs on steel, you wouldn't have a steel plant in the United States. And Biden was unable to get rid of those tariffs because they threw off so much money that his numbers, which didn't work anyway, because his numbers were terrible. What he did, the way he spent money was so horrible, and what he allowed to happen to energy. That's the other thing. Energy is going to be like it's never been before. Mr. Vice President is here. Do you have anything to say while you're here? Very good Vice President.
I'm just here to watch the show, sir. Okay. I think airplanes are pretty cool, so I want to go check this out.
It is cool.
Mr. President, I need to take off the trade war at this point, though.
Well, I'll be speaking to President Xi. I have a great relationship with him. We're going to have a very good relationship. But we have a $1 trillion deficit because of Biden with President Xi. More than that. I mean, I've heard $1.2 trillion. We have a deficit. And I've explained that to President Xi. We also have a problem where he's allowing fentanyl to be sent into Mexico and then cross the border and, you know, killing. I think the number is much higher than the 125, 115 I think it's closer to 300,000 people a year. And so that's a problem. But they have a tremendous surplus against the United States, and we don't want that.
President, why do administrations bring power? A number of ministries have come to you asking for exemptions on tariffs. Is that something that is under consideration by you?
Well, people are coming to me and talking about tariffs, and a lot of people are asking me if they could have exceptions. And once you do that for one, you have to do that for all. So, I mean, generally, I did something interestingly during 2 weeks ago. I gave the American car companies a break because it would have been unfair if I didn't. And everybody said, oh, he changed his mind on tariffs. I didn't change my mind. I helped our, you know, sort of big 3, big 4. I helped some of the American companies. And instead of taking it properly, they said, oh, he changed it. I don't change. But the word flexibility is an important word. Sometimes there's flexibility. So there'll be flexibility. But basically, it's reciprocal. So that if China is charging us 50% or 30% or 20%, and I don't mean China, I mean anybody, any country, Canada. Nobody knows that Canada is charging our dairy farmers. They have 270% tariffs. Nobody knows that. Nobody knows that. They have up to 400%. They have a couple of tariffs at 400%. Nobody knows that. Nobody talks about that. And remember, with Canada, we don't need their cars. We don't need their lumber. We don't need their energy. We don't need anything from Canada. And yet it costs us $200 billion a year in subsidy to keep Canada afloat. So when I say they should be a state, I mean that. I really mean that, because we can't be expected to carry a country that is right next to us on our border. It would be a great state. It would be a cherished state. The taxes for Canadian citizens would go down in less than half. They don't spend money on military because they think we're going to protect them. There are many things that they do, like icebreakers. They want us to provide icebreakers for them. Oh, that's wonderful. So the Canada, they're very tough traders too. I want to just tell you, all the people, they're tough traders. They trade very tough. And, the expression I use is some people don't have the cards. I used that expression about a week and a half ago, right? Somebody was negotiating who didn't have the cards, who's now, I think, saying that he wants to do it. And I think we're going to have a big deal on that very special something. We got to make a deal on that. But Canada has been a very nasty negotiator against the United States, took advantage of the United States for a long time. But nobody knows that they were getting 270% tariffs on dairy products.
Mr. President, follow up on Canada, and I don't think I've heard you say this in all of the talk about Canada becoming the 51st state. Are you concerned that if they became the 51st state, they would be a very, very blue state? Very, very big and very, very blue.
No, there might be, but it would, you have that artificial line that goes, that straight artificial, that looked like it was drawn by a ruler, somebody with I don't mean a ruler like a king, I mean like a ruler, this way. And it's just an artificial line that was drawn in the sand or in the ice. And can I tell you, Peter, just, you add that to this country, what a beautiful landmass, the most beautiful landmass anywhere in the world. And it was just cut off for whatever reason. It would be great. Now, is it liberal? Maybe, but a conservative until I got involved, because I don't care who wins up there. I frankly probably would do better with the liberal than the conservative, if you want to know the truth. But just a little while ago, before I got involved and totally changed the election, which I don't care about, probably it's to our advantage actually. But the conservative was leading against, I call him Governor Trudeau. The conservative was leading by 35 points. So. So I don't know about that. I think Canada is a place like a lot of other places. If you have a good candidate, the candidate's going to win.
And I don't know if you've seen this, but the two astronauts that you just helped save from space, they didn't get any overtime pay for all that extra time. They got $5 a day per diem for 286 days. That is $1,430 in extra pay. Is there anything the administration can do to get them, to make them whole?
Well, nobody's ever mentioned this to me. If I have to, I'll pay it out of my own pocket. Okay, I'll get it for them. I'll take care of that. I like that. I think that's. I'll pay it right out of my. Is that all? That's not a lot for what they had to go through. And I want to thank Elon Musk, by the way, because think if we don't have him. There's only so long, even though they're in the capsule up there, that the body starts to deteriorate after 9 or 10 months and gets really bad after 14, 15 months with the bones and the blood and all the things that you've been reporting on very well. And if we don't have Elon, they could be up there a long time. Who else is going to get him? And I just want to thank him. He's going through a lot, what they're doing to him. And these people are going to be caught, and they're going to be caught, and they're going to be prosecuted. And from what they tell me, I see this just by watching your programs and reading the news, but from what they tell me, they could get 20 years in jail, and they'll get it. I'll tell you, there's going to be no leniency, and there'll be no pardons. I can tell you that right now.
And you said this morning 20 years in jail, and then maybe you said this morning 20 years in jail, and then maybe they'll go to one of these prisons in El Salvador. Do you think with the way that the judges have been issuing injunctions, it would be easier or harder to send these Tesla domestic terrorists to a jail in El Salvador than these MS-13 or Tren de Aragua guys?
Well, I view these people as terrorists just like others. When I looked at those showrooms burning and those cars, not one or two, like 7, 8, 10 burning, exploding all over the place. These are terrorists. You didn't have that on January 6th, I can tell you. You didn't have anything like that on January 6th, which is sort of amazing because on January 6th, the Democrats were talking. Nobody was killed other than a very beautiful young woman, Ashley Babbitt. Nobody was killed. And you look at what's going on now with these terrorists. These are terrorists, and that's an organized event. Take a look at their signs. Take a look. they're all made by the same sign company, a nice expensive job. Now, these are the people that finance it are, in my opinion, in just as big a trouble as the people that are setting the match and setting the fires. So we'll see. It's under very serious investigation by the FBI and by the Justice Department. These people are terrorists. Okay. Yeah, go ahead behind you, please.
Mr.
President, what do you say to American military families who are seeing Elon Musk at the Pentagon today, are hearing about Defense Department cuts, and their thoughts are immediately going to the safety of their loved ones who are currently employed?
Well, we're making our country strong. And when they see a thing like that and they hear that story about Elon in China, what they should do is realize that the New York Times is a corrupt institution, because I think they're the ones. They knew that story wasn't true. Nobody believed that story. People that, when I first called, they laughed when they heard this story. Nobody believed it, that the Pentagon was giving him a briefing on what war with China would look like. And he has business. No, they made that up because it's a good story to make up. They're very dishonest people. Look, I have it with the Times, and you'll see more and more of it. To me, it's a very dishonest organization. But a story like that is made up. It's total fiction. And I just wanted to make sure. I called up Chief of Staff and I called up Pete. And I said, is there any truth to that? Absolutely not. He's there for Doge, not there for China. And if you ever mention China, I think he'd walk out of the room. He wouldn't take it anyway. So it's just a made up story. Nobody's taking better care of the military. One of the things that I know that Pete's doing is he's talking about a lot of the civilian staff, and we're going to get them other jobs. You know, we're going to have a lot of jobs in this country, but we don't want to have wasteful jobs. We want to have meaningful jobs. And those were wasteful jobs. Those are jobs that not only military, but jobs where people don't show up. You take a look at Department of Education. I've never seen so many buildings with the names on it. You go past one after another Department of Education, and they're empty. The people don't show up. You know why? Because they have other jobs, because they're playing golf or they're playing something. They're doing something. And we have a lot of great people, but we have to move that back to the States. We're going to make our country strong, and we're going to get people much better jobs, because we have companies moving into our country, the likes of which we've never seen before. Nothing like this has happened. And it's automatic. They don't want to pay the tariffs. How do you avoid paying the tariffs? You build your plant in the United States, and it's a beautiful thing to see. I see it. So far, I would say $4 trillion. Nobody's ever heard of them. No country's ever heard of numbers like that. $4 trillion, and those are the best ones. The biggest, best chip maker in the world. I'm not a fan of the CHIP Act, where you give billions of dollars away to companies that don't need it, and it won't bring them here. I'm giving nothing away. All they're doing is coming here. They're building because they want to avoid. Remember this on the tariffs too, because that's going to be, Liberation Day, April 2nd. It's reciprocal. If they charge us, we charge them. So somebody say, well, how much are the tariffs? Very fair. If India, as an example, has been very bad to us on tariffs, they charge 100%, 200%, whatever they charge. Now, Europe just announced they're lowering the tariffs on cars. We charge like a joke, 2.5%. That's what this country charges. Europe just announced that they're reducing their tariffs on cars to 2.5%. It's nice. But they also have non-monetary tariffs where they make it impossible for the cars to get in, even without the dollars on them and the dollar signs. It's called a non-monetary tariff, where they put on controls where no matter what happens, because they don't want cars, they don't want the American car in their market. And yet they send us millions of cars. They send us big agriculture. They don't want our agriculture. They don't want anything from us. European Union's very tough, but now it's fair. So whatever they do to us, we do to them.
Russia continues to attack Ukraine. Are you planning to impose any sort of sanctions?
Well, they're fighting against each other. Yeah, I think we have a ceasefire on a lot of areas, and so far that's all held very well. And getting that ceasefire, they had a lot of guns pointing at each other. You had some soldiers, unfortunately, surrounded by other soldiers, and they are going to be, I believe we're going to have pretty soon have a full ceasefire, and then we're going to have a contract. And the contract's being negotiated, the contract in terms of dividing up the lands, et cetera, et cetera. It's being negotiated as we speak.
What do you say to critics who say that your actions towards law firms amount to coercion?
Well, the law firms all want to make deals. You mean the law firms that we're going after, that went after me for 4 years, ruthlessly, violently, illegally? You mean, are those the law firms you're talking about? They're not babies. They're very sophisticated people. Those law firms did bad things, bad things. They went after me for years. Russia hoax, all a hoax. It was a hoax. It was Hunter Biden's laptop. It didn't come out of Russia, by the way. It was came out of his bedroom. It was all a hoax developed by Democrats. Hillary, I don't think Biden did, because I don't think Biden knows what the hell he's doing, frankly, based on everything I see. I've seen things since being here that are so sad. What he's done to this country, what he and they did to this country, those people that surrounded him, who, by the way, are radical left but smart. He's not smart. He was never smart. But these are radical left, smart people. They totally controlled him. He did whatever they told him to do. And it's a shame. It's so sad to see what happened, what they've done to this country, both not only the inflation you saw, but allowing millions and millions of criminals into our country. That's an inexcusable act. And many other things besides that. Thank you very much, everybody. Thank you.
Okay, so there was a lot that was said there. I'm only going to go over one thing, which is what I care about in relationship to markets. Look, maybe April 2nd is going to be more aggressive than all of us are thinking, definitely than what I was thinking. It sounds like, and maybe this is Trump just putting on a show. By the way, Lockheed going down 7% right now off losing the contract. Tesla up 3%. Or maybe this is Trump being dead serious, but I mean, if we reciprocate hardcore April 2nd and this whole Liberation Day thing is realized in terms of meaningful reciprocal tariffs across the board, yeah, it could get ugly. It could get really, really ugly. I mean, I don't know how the market's going to react to that. I do not think they priced that in. I don't think the S&P 500 at 561, given it was at 549 last week, has priced in a full-on trade war. I still feel there's going to be some negotiations, like he said about Europe, reducing their auto VAT to 2.5, similar to the United States. Maybe we get more deals like that. But if we don't, if India doesn't budge on their 100% tariffs on alcohol and we tariff them back 100% on alcohol, yeah, we're in a trade war, straight up. And so, I mean, Trump sounded pretty damn confident about April 2nd that it's happening. I guess we'll see in the next coming days if it really does happen. But that is my takeaway from everything I just saw right there, that it looks like they are gung-ho about making these tariffs become real. They're not going to let that easily go away. And I guess we're going to see. If it's high tariffs that are reciprocal in nature across the board, which would be towards many countries on millions of products and different categories of goods of products, yeah, it's a trade war. I mean, like, it is what it is. Now, maybe it starts April 2nd and it ends April 15th, right? Because like both countries get so tired of it, they come to an agreement after it officially launches. But I think it's likely going to happen. I mean, why wouldn't he sound confident? So the only reason my logic has been that we're not going to get this full-on trade war is because every time it was supposed to happen, it got delayed. And to me, that delay was because his teams internally are working with other countries' teams, and they just need more time. So he doesn't want to sound like he's flip-flopping, therefore there's this artificial delay, but that delay really is just meant to create a foundation for them to be able to negotiate. And then when you have this boogeyman day show up as April 2nd, they swoop in and they say, actually, we've come to a deal. It makes Trump look good. It makes the administration look good. Makes the other countries look good. We don't end up having a trade war. We have more peace, etc. Because I feel like if they wanted to just do the tariffs, they would have just done it by now, right? So why would you have this month of delay, right? Like what's going to happen between now and April 2nd that stops it? Like, the only thing would be like negotiations, which I think they're having. But if they're not, it's going to be aggressive. Outside of that, Trump mentioned Biden like a lot. So it was the Boeing contract. It was a ton of random things about Biden. And then it was tariffs that most likely from Trump's perspective, are going into effect. But will they? I guess we'll find out on April 2nd. Markets, we're going to end out the stream right here. Markets seem to be relatively flat to green. Tesla's up 3%. Oh, the other big thing they talked about is that whole Elon China story. I saw that headline last night from the Times. I was a bit skeptical as well. Like, Elon Musk, really, is he going to get detailed briefings on Chinese geopolitical relations? Like, I didn't read the article, but I didn't really think that headline was that big of a deal, or it was that even real. And apparently Pete Hegseth confirming today that Elon was there to talk about Doge at the Pentagon, not about Chinese relations. So seems like they're denying that article that came out last night. NVIDIA right here, 117, Palantir 88, Red Cat's up a little bit, Archer's up 4% on the day, Apple is up a little bit, S&P 500 getting some green candles, only down 0.3%. It was down 1% for the majority of the day. And Tessie, the biggest outperformer for today at 243, up about 3.12%. All right, cool. That is it for us on the show today. Elaine says, okay, I'm out. Grandkids coming. Have a great weekend, everybody. Elaine, enjoy your time with the grandkids. Hope everyone enjoys their weekend. I will be back for the market close and for Palantir Weekly tonight. So we will still have 2 more streams, but for those that are done for the day, enjoy the weekend, and hopefully you get to take a little bit of time off from some of the volatility we've had in the markets today. Here is the word of the day. It is gull.
Gold.
Thankfully, did not say this one wrong. To deceive, trick, or cheat. The girl gulled her friends into believing her elaborate ghost story. He was gulled into believing the email came from his bank. I think we can all agree this market has been gulling us into believing we are getting into a bullish uptrend, because 5 hours later we go red. But that is the word of the day. All right, cool. That is it. We'll be back again for the market close. Steve will be on the market close. He's got a bunch of thoughts on the markets, and Palantir put out a new article today about Palantir, so we'll talk about that. And then we'll have Palantir Weekly later today as well. All right, cool. Thank you, everybody. Thank you all for joining. I will see you guys on the market close. If I don't see you on the close or on the weekly, then enjoy the weekend, and we'll be back for the Sunday's stream, which should be happening. My cousin's actually flying in, but she's flying in the morning, so I'm pretty sure Sunday stream should be good. If not, I'll let you guys know. But yeah, if not, I'll see you guys on the Sunday's future stream later this weekend. All right, bye everybody. Have a good one. See you guys on the market close.